Good morning.
Good morning, everyone. Welcome.
Is
How's it going,
everyone
Dirk?
a new week, new trades, new setups, new profits?
That's right.
Question mark. Hopefully profits, of course. Finally, we have this 4th of July week behind us. I mean, that was like insanely boring, no?
It was.
It was totally boring. You should have had your holiday actually that week, I thought.
Yeah, I think that would be great. Yeah. No, it was not a lot of things happening in the markets, but we did. Let's see. Have we had anything happening over the weekend? I thought,
Not really.
being
Even
Monday.
Bitcoin was like trading around 108,000 for the majority of the time, like $200 up, $200 down. And then like Sunday afternoon, we had a tiny bit more volatility, but not really. So we're starting into the week, I think, as we left it.
Yeah. So let's see I haven't really seen anything happening over the weekend much. The only kind of news that I saw over the weekend was perhaps OPEC plus increasing production.
And Donald Trump extending the moratorium until 1st of August, no? The deadline was in 2 days.
All right, the deadline for the tariffs, no?
Yeah. Actually, right, okay. I saw that as a headline this morning. I don't know if it was a hoax or if it was something correct. But you know what? Let's maybe play the intro very fast, and then we'll get into the action.
Let's go.
Oh, he's gone with the wind. You're sitting somewhere else today again.
Yeah, I'm having some troubles. Oh, I'm getting strawberries here. Can I get some? Oh, look at this!
Nice.
My son's picking some strawberries
from your own garden.
Good. What?
From your own garden, or?
Yeah, from my own garden. It's pretty cool.
Nice. Yeah, we are growing strawberries this year as well, but they are also tiny, small.
And do you know what these small ones is? They grow wild, but they're not strawberries. They're like very small.
Yeah.
What is this?
Is that like that's in Germany? I think in English it's called raspberry, no?
Raspberry, yeah, that's right, raspberry.
Yeah, they grow wild here as well, raspberries. Yeah, but you have to be careful when picking them, because if you pick them like at the height of your knees, you can get infected with some parasites from foxes, because the foxes like to pee on those bushes. So
yeah, but we don't have like in the garden. We don't have any foxes in the garden.
You don't know.
Oh well, okay. Well, I guess. But I'm not gonna tell him. Let's see if he gets infected or not. We'll we're gonna take the risk. As traders, it's all about taking the risk.
The risk and what is the reward?
Yeah,
that's the question.
So we're getting some comments from a lot of comments from one person, and we do appreciate you, and we do appreciate all the comments and everyone in the comment section. Just make sure that you're not spamming, because we do have a lot of people here asking questions and wanting to be part of the show, and ask us questions, and we'd love to help all of you. So make sure that we keep it non-spammy. And we also had some questions about the giveaway results. The giveaway results for last week was presented on Thursday, and the emails for the giveaways should have been sent out. So if you did not get an email, that means you did not win. But all the winners was announced during Thursday. Okay, nice. So I said in the beginning here, we talked about oil, and the only thing that I've really seen over the weekend was that. So you said that Trump has increased the deadline for the tariff, but didn't he say anything about? He said Wednesday, didn't he? Like the 9th of July.
Yeah, that was the initial one. That's why I said let me maybe quickly check if that was like a hoax I read somewhere.
Because nice.
I type in Trump into Google, and the first two search suggestions are Trump cannot read and Trump catheter.
That's because your search results are biased.
Probably. I know. I'm a big Trump fan, as you have.
Yeah. If I Google Trump. It says Trump. Okay, I'm not getting a lot of interesting things like, does Trump know how to fly a giant bald eagle?
So I'm getting here something from the Guardian, which says,
You know, I did watch Bloomberg this morning.
Yeah,
and
they're getting into effect on August 1st.
Okay, so they're going to go, but there was something about the 9th. There was something about him saying that he's going to be sending out a lot of letters.
Yeah,
he's going to be sending out a lot of letters on Monday and Tuesday, basically telling people that they're going to have to move things along and get something set up. Otherwise, they're going to go with the original. Basically, he's threatening to go back to the original tariff number if they can't make a decent deal.
Yeah.
And yeah.
So basically, they have time probably to respond to those letters now until August 1st. That's how at least I interpret it. Okay, so we are still in this status quo limbo a bit. That explains also why the markets are rather slowly starting this morning. But I'm sure we're going to see more action later. So yeah, maybe if you allow me to share my screen quickly, a couple of things I'm looking at. What do we have trading? If you don't move things along, then August 1st, you will boomerang back to your April 2nd tariffs. That's like the type of language I like to use when my daughter doesn't do what I want from her, you know? If you don't do like this, you are not going to watch tablet again and cartoons. And you're not allowed to play with your Lego. Yeah, very typical Trump, I would say. But thank you, Trading X, for sharing that quote with me. So I'm looking for gold entries. Market is has already actually done during the Asian session what I would like to see during the European session, where we saw this, which most of the time is the first one is the best signal from my system. With the more signals you get printed, the weaker they get normally over the time, which is due to the reason that trends like to flatten out eventually. And we see that very often, of course, during the European session, especially on a Monday morning, which happens to be the time I'm on here with the fibers. So very rarely that we see like crazy volatility here or like trends really continuing in a strong way, at least not when the news coming out over the weekend is not something, really driving the markets. Nonetheless, I'm kind of looking. I would be willing to risk a little bit on the high stakes account here should we see another short signal, which could be the case if we see a turnaround here. I could imagine that we are going to attack 3,300 again or go below. So we have to wait here a little bit. It's a bit a weird scenario. We have risk off moves as a matter of fact in euro dollar this morning. I would like to wait a bit for impulses also from the US stock market. So typically I would like to see the NASDAQ and the S&P 500 printing bullish signals like the one we actually had here on the S&P 500 already, which is something we could trade, but not at this hour of the day, in my opinion, because liquidity in the real futures, this is of course a CFD here that is displayed, is just not there yet. So I would wait. But ideally, I would like to see maybe the NASDAQ and the S&P 500 showing that they are willing to move higher, which would then also make sense for a short position in gold. If we look at gold, and I've been telling, I think for 2 or 3 weeks, kind of the same story now on gold. It's the typical pattern still that we see from gold every now and then, that we get those, I like to call them compression zones. I think they're probably like official names for something like this. Now, this is not what I'm showing you here, like meant to be some triangles or something. It's just to highlight what I'm talking about. But we, from time to time, get these zones where the volatility of gold narrows, and this is very normal. Actually, this is something you see also in other asset classes, not just asset classes, in assets itself that tend to be a little bit volatile. So you see a compression probably in standard technical pattern analysis, you would call those triangles or wedges or whatever they are called. It doesn't really matter. What's important for me is that usually these wedges are resolved by volatility, either to the upside or downside. We don't know that yet. Of course, looking at how gold has been trading over, basically since the beginning of 2024, the preferred solution, volatility's solution to this is to the upside. So we want to go preferably with a trend here. And you can see this happened back then in July of 2024. It happened very strongly in the beginning of 2025, where we had a very nice move up by 10.4%, which is a lot for so-called forex asset. And if we would see something to the likes of this again, if we break out somewhere here, for example, you could very, very quickly go to 3,600, 3,700. But and that's always, like of course, the shame when you're a trader. You gotta be a little bit patient and wait for events like this. So summarizing again, right now during this session we are having here right now, I would prefer to maybe, if I see another print of a short signal here, to try to trade this with a tight stop loss and with the intention of seeing gold attacking 3,300 again, because if it moves below, we could quickly see 3,295 or 3,290 would be my preferred scenario. Like from my system setup, not the ideal trade, but nonetheless something I would be willing to trade here, so we can see some action. Are you looking at anything right now, Jonatan? Anything that springs to your eye, so to say?
Well, I'm thinking we should stay with the gold analysis here. I've got gold up on my screen here, and also, guys, make sure that if you do have any questions or any chart requests or anything that you want us to take a look at, let us know in the comments, and we will gladly help you guys out with sharing our analysis. Remember, though, that this is not financial advice. Nothing that you see here is financial advice. You always need to do your own research, of course. And the trades that we're taking here during the live trading room today is not recommendations or anything like that. You should not follow our setups unless it's the same setup that you find using your system. If you don't have a system, then we have a lot of resources on our YouTube channel where you can go to and check out how to create your own system. If you have any questions on that, how to create a system, what system we're using, make sure that you're in here and ask questions so we can help you out and create a foundation for you to start trading based on. Before we jump into the gold analysis here, I have a quick question that I want to comment on for Martin. May I ask, what do you use indicators? What is giving you the signals? Okay, so this is probably a question to Dirk, because Dirk had the gold chart up recently and he had a couple of signals and a specific indicator. Maybe you want to just quickly go through what it is that you're looking at for the new viewers that haven't seen your analysis using those Renko charts.
Yeah, without now giving away all the secrets, I hope you'll understand this, because this is my edge in the market currently. I've been working on this. Yeah, I think it's safe to say with all the automation I'm working on right now, it's probably 300-400 hours that I put into this. So of course I'm not just sharing this here for free, because then the edge would be gone probably sooner or later. So hope you understand it. So on a very high level, what I'm doing here, this is a trend following system. It's a trend following system based on 3 components. The first component is it measures the angle and the slope of exponential moving averages, specifically a 200 EMA, a 21 EMA, and a 50 EMA. And not just crossovers, it's really the momentum expressed by slope and angle. And what specific slope and angle I'm not going to share here. Plus, I have an extended database on price action. And not just the price action, the usual we see out there, bullish engulfing candles, pin bars, outside bars, and you name it. And I'm not saying those do not work. However, I have a database on more extended multi-candle pattern, so to say. So when my system sees something there, it takes that into account. And then last but not least, because I want to trade with a trend, and if I trade on a lower time frame, there's a lot of distortion always on the chart. So if you look at gold here, for example, on a 2-minute or 5-minute or 1-minute time frame, you very often have these areas, especially this morning, where price is just moving sideways, and it basically messes up a lot of the measurements you get from not only my indicators, from any indicator, be it a moving average, be it an RSI, and so on and so forth. So I want to cut all this noise out from the markets. This is why I'm using Renko charts. So here, a new box, red box, for example, is only painted if a price would move now from 3,309 to 3,308. Then a new red box would be painted. If that takes the next 100 years until that happens, it doesn't paint anything. So it takes completely out of the equation the time variable, if you want to say it like this. Now, this comes, of course, at a trade-off also, because it tends to be a little bit late to the party. So it tends to take, like moving averages, a little bit longer to measure it. But still, it gives me, especially on those first signals, when you see a change of trend, it gives me a considerable edge over the market. So this signal, for example, appeared here, about here. So we're talking about 3,323. And I didn't, because I was still sleeping, of course, at 3 a.m. last night. I could have traded this already all the way down to 3,301. So this is what I'm looking at. I'm usually trading this with a stop loss of, for example, 1.5%. That depends also a bit on the volatility. And all of this, I did extended back testing on with the help of large language models like you find in Claude. So that's, in my opinion, really the secret, not to creating systems like this so much, but to make sure if you think you have an edge, you have found something, an edge over the market, you have found alpha, that you can backtest it very quickly. Because, I could like load all the data here, and then I could just go up here and export the chart data. Import that into Claude or ChatGPT or whatever you're using. Ask it, hey, can you explain me what you see in the CSV file? Okay, seems like you're interpreting this file right. Check for me how good are those red and green dots in pointing at areas where the market is going to go either up or down. It's a process, but and I know it sounds complicated. It's not really that complicated. But I think it's the go-to process, at least in my opinion at the moment, and a great tool for you to really, really very quickly test, is the strategy that I've developed really something that's working, or would I waste my money instead of, risking your own money already, or go through extended periods of demo trading. So that in a nutshell. I could go on probably for the next 10 hours, of course, about this.
Let's not do that. It's very interesting though, and I think it's a conversation that I think a lot of people need to pay more attention to, like creating systems and checking the statistics and actually looking at what's working. Am I still trading the account live with the chat? Yes, I am. And I'm thinking I want to be doing the same thing today. By the way, Mike, not Mike, I was going to ask you, Dirk, how my mic is. And then I said, Mike, how's my Dirk?
It's good. Your Dirk is good, Mike. No, your mic sounds normal. All good.
Perfect. Okay, so yes, I do have an account that I am trading live with the chat, and the idea is that I got a 10K high stakes account. See, I'm gonna log into that, and excuse me if there's a lot of background noise. My son is in, I don't know what he's doing.
What's up,
Mike's
Mike?
always in the background. Always in the background. By the way, guys, we are next week, most likely, we're going to be moving over to, you're going to see a lot of changes here in the live stream. And I just want to, say a big thank you to Mike, because Mike has been spending a lot of late nights setting up the new software and everything that we're going to be using. He's done an amazing job on that. So most of the changes, probably all of the changes that you're going to see in not too long is all because of Mike. So a big thank you to him. He's really been doing a lot of great work on setting up the live streams and making sure that everything is running smoothly. So big thank you to Mike. So give Mike a big thank you. Everyone in the chat, thank you, Mike. Mike, you are the best. Do it right now.
You are the GOAT, Mike. Absolutely.
Yeah,
I agree.
That's right. Really, really good stuff. Okay, so gold. We're going to be looking at gold, and first, what I want to do is I want to go over to the chart here on trading view. So we're going to switch over to trading view quickly. And what do I see for gold? First, we want to look at the poll that I asked. We are right now seeing about 100 people. And by the way, guys, we got more than 100 people watching this. So make sure that you go in the comment section and vote for the poll. And I also see that we have a much lower like count than we have view count. So make sure that you go in and like the video. Now, I'm not just asking you to like the video because I want you to like the video. I'm asking you because if you like the video, that will activate the YouTube algorithm. Going to bring more people in here, going to bring more subscribers. And the more subscribers we have, the bigger guests and things like that we can create for you guys here in the live trading. So one like from you is actually going to help you as well in your trading journey. And okay, so we got 57% saying bearish on gold. And
I hope that wasn't too much influenced by what I just said.
No, I think usually what I see is that people are quite stubborn when it comes to their analysis and their view on the market. And right now, it looks like most of you are bearish on gold. It's going to be interesting to see how this might develop once I start looking at my analysis. But on the weekly, I mean, let's be honest, there's nothing bearish about gold here. I mean, there's nothing bearish about gold here on the weekly. We go down to the daily. Is there anything bearish here? I mean, we could probably find some cases where we could say, for example, that this is a trend. And of course, that trend is now broken. So we could view this as the local daily trend. And then, of course, we have a lower low, and then we have a lower high. So one could argue that it's bearish. But we have to take into consideration, I believe, the higher time frames. And then we have to think about what's our investment horizon here, or what's our trading time frame. Are we looking to enter a swing position on gold? If we're looking to enter a swing position on gold, I would most likely be looking for long positions because of the way that the higher time frames are looking and the way that, the weekly is bullish and the daily is kind of like neutral in a sense, but still perhaps hitting some type of support level. We could view that as a support. And then I would say, okay, weekly bullish, daily neutral at support. That makes me think that I would want to be bullish on gold as a swing trade, okay? Because for me, there's no reason yet to go short on gold unless we perhaps start breaking below this level. Breaking below that level, and of course, eventually that level might make me start to think about perhaps shorting gold. We also have to think about the perspective of this being a range. So if this is a range, then that means that we're hitting the range lows right now. We can also adjust the range to using those highs, which I think kind of makes more sense, and perhaps even those lows, which actually creates the range. It creates a very similar range because we have the range EQ at basically the same area depending on which highs and lows we are creating, which means that we are currently in the middle of this trading range that we have seen gold trading in since April this year. So neutral on the daily, bullish on the weekly, 4 hour. Well, it's interesting because we are now hitting an important area right here. I think this is a rather important area. Why is it important? Because if we draw this level to the left, we will see that price has reacted to this level first time at the beginning of June. We had quite a good reaction from that level, a big violent move to the upside, came back down, reacted to the same area, but didn't go as far down, which tells me that, there's bullish pressure, a lot of buyers coming in here, retesting the level, front running the level with more buyers, and then we're having a big move to the upside. We're coming down, we're testing that level once again and having a very bullish reaction. A strong break to the downside once the level is broken, and once the level is broken to the upside, a strong move to the upside. So I think this is a very important level for gold. Now, this is obviously a level that has been acting as good support in the past, and this is actually the first retest of this level after reclaiming it as support once again. So I think that is crucial. So on the 4-hour, even though the local trend is bearish and we broke that level, I can't really be bearish on gold because of the fact that weekly very bullish, daily bullish to neutral, and then the 4-hour at support. So I would be leaning bullish on the 4-hour. If we go to the 1-hour, we see a good reaction again at this level, good bullish price action on the 1-hour. Not really looking for any shorts at this point because we've already hit the support. Price is telling us that this level is now support, and we have a very good untested break area up around these areas right here. So I would be more inclined to think that we might be going higher on gold short term. So again, to rephrase, we got the weekly being super bullish, the daily neutral to bullish, 4-hour at support, 1-hour at support. We're going on then down into the 15-minute. Now here we're seeing something slightly different. We could mark out a channel here, and we could see that we have a bearish channel right here, but we're also about to perhaps break above that trend line that we get by connecting these highs right here. So if we get bullish momentum coming in here, we're going to be switching down to the 5-minute. If we have, I would be looking at this as the breakout level, perhaps add a level here. If we get a break above this level and sustain price action to the upside, I would be looking for an intraday move up into this region. Now, if we can't reclaim this as support, perhaps for an intraday short below that level down to the downside. But again, I want to make sure that I'm trading with the overall primary trend. So for me, I would be more interested in going long here than short, but I need confirmation. So unless we get that confirmation, not really interested in trading gold in either direction. If we move lower, that means I can short, but then that means I'm shorting against the primary trend. Now, this is interesting. 50% of you are now bearish on gold. We went from around 60% bearish to 50% bearish during the course of this analysis. I'm not sure if it's because of me, but it's an interesting observation. Maybe you get influenced by my analysis, which is actually not a good thing. It's actually not a good thing. Because you should always go with your own analysis. And but yeah, I think, okay, Leo says that how is 4-hour bullish? The 4-hour is clearly bearish. Okay, so let's go back. Let's go back. Now again, you saying that the 4-hour is clearly bearish means that you think the 4-hour is clearly bearish to you. Now, if I go to the 4-hour and I look at this, and you would say that, okay, the 4-hour is clearly bearish. Now, what do you base that on? I would be interested to know why you think the 4-hour is bearish and your reason for thinking that the 4-hour is bearish. Now, I'm not saying I don't agree with you, okay? I'm not saying I'm not agreeing with you, but I would be interested in hearing your analysis behind the statement that the 4-hour is bearish. I would think that we're looking at lower lows and lower highs. But we have to look at, context in technical analysis is everything. We can look at a isolated move in technical analysis and say that that move is bearish. But then looking at the context of the broader picture, it tells us something else. So yes, the 4-hour, looking at the idea of lower lows and lower highs, then obviously we have a bearish structure right here. But then we're hitting that support right here, and we're creating a doji type candle. Maybe it's not a doji, maybe it's more of a not a spinning top, but I don't know what that pattern is called when it's at the bottom, but it's a spinning top, but at the bottom, can't remember what that is called, but it's basically an indecision candle. Okay, so we're seeing the market is in a bearish structure. It broke that low, which created a new lower low, but then it hit support and told us that the market is now in a phase of indecision after hitting major support after a big move to the downside with an untested level to the upside. So I would argue that the structure, yes, the local structure is bearish, but given the context of the broader range and the fact that we're hitting support, I would look at the 4-hour actually being bullish. Another thing that I wanted to show you is do not focus on this, okay? Do not focus on that. That's the very local trend. And on the 4-hour, this tells me nothing. On the 15-minute and the 1-hour, this might tell me something. But what this tells me on the 4-hour is that you had a big impulsive move to the upside. This is the 4-hour move that I'm interested in. A big impulsive move to the upside, a slow grind to the downside. And guess what level we are hitting of that up move? We're most likely going to be hitting the 50% fib, okay? So you have a big move to the upside, and then a slow grind to the downside, and that slow grind takes us straight down to the 50% fib. Now, which are the two most important Fibonacci levels? Well, I would argue that it's the 50% and the 0.618. When you have a strong move to the upside, a slow grind to the downside, hitting the 50% of that move to the upside comes with a high time frame support. To me, that's bullish. And when I'm looking at the 4-hour, I'm looking at this, not this. I'm also looking at the breakout structure that you're probably not focused on. And the breakup structure that I'm focused on is downtrend, breaking that high, breaking the high once again, coming down, hitting the 50. So this whole thing is the context of the move. Now, if you choose to just look at that one, then we have to go down into the time frames. We might want to look at like the 15-minute or the 1-hour of this.
Can I quickly add something to that? Sorry.
Yeah.
Just because I think it's such a good example of like what your time horizons is, how your analysis can change. Like you just said, if you just look at the local structure, yeah, you could argue like this is a bearish structure. The question is, of course, is the 4-hour time frame the right time frame to analyze something like this? I would agree with you. Probably you would more be looking at something like hourly, maybe even a half hour or probably 15-minute charts, if you are aiming on those local structures. Because like my first reaction when I heard this, we are in a bearish structure right now, was like looking at the grand scheme of things, and where I said like, well, I mean, for me this is a complete, still valid bullish structure with higher lows and higher highs. Not necessarily, this is why we had this wedge situation that I was talking about, but if I want to play by the book, in order for me to turn this into a bearish structure or more bearish structure, I actually would like to see prices below this last area here where we had a new local higher low, which is around 3,240. So that's still some way to go. And so it's funny, we can talk about the same chart on the same time frame, but come to different conclusions because we need to define always like, what structure are we looking at? Am I zooming in at the moment? And like you said, am I looking at this structure? Well, of course, then I could say like, well, I have a high here, I have a low here, I have a lower high here, I have a lower low here. So probably market might be moving up there and then go lower. Of course, would be a valid interpretation of this. If I would do this on a 4-hour chart, probably not. But this is why it's so important to put your analysis into a context already. Like, okay, I'm looking at a 4-hour chart. I'm looking here really at the very local structure that we've been seeing developing, let's say, since the beginning of July, or if we want to look at this move, which I also deem very important. I think you're absolutely right there, Jonatan, as something that developed since, what was that, like the 25th of July. Because I normally, not saying that I would trade this, but this is also something typically where I would say like, hey, do I have Fibonacci retracement somehow lining up? And we can see already, we bounced off the 50% Fibonacci. 50%, 61% Fibonacci, those are the levels to look at. And if they align with something like weekly opens, monthly highs, monthly lows, and so on and so forth, that gives them even more confluence. Sorry, I couldn't keep quiet there.
So, yeah, I absolutely, agree with you, and I think it's a super important section. You see, I'm trying to write a comment and speak at the same time. Wow, it's the most difficult. Okay, so let me just read the comment instead of trying to say something else while writing. Should I short or long gold? Answer in the poll in the comment section. That's what I'm trying to write. So I'm going to put a timer on 2 minutes. What I want you all to do is, now we're going to be taking a trade here, not together, but you're going to be taking a trade for me, okay? So now the way I do this is usually I share my analysis after deciding on the trade. But what I want you guys to do now is, you got 2 minutes, okay? So you got 2 minutes. I'm going to put a timer on for 2 minutes, and you will go in and you will vote. Will I go long or short? The decision is final. If the majority of you say go short, we are going to go short. And then after that, we're going to be selecting the time frame. And then we're going to be thinking, are we going to go market order or limit order for that trade, and then time frame. And then we're going to be thinking about the actual setup. So while you're answering this poll, also think about a potential setup, okay? Right now, we got 52% saying long. So right now, 53% saying long. It looks like we might want to take, we might take a long trade on gold. So unless that changes, we got 55% now. So unless that changes, think about a potential long setup that you would want me to take here, and then write it in the comment section. Do we want to use a market enter or a limit order? Where should we place our stop loss? Where should we place our TP? So give me some ideas on what you're thinking right here. We got about 50 seconds left, and we have 53% long on gold. We got a lot of people saying long. We got a lot of people saying short. Spamming the chat will not help you. Spamming the chat will only get you banned. That will not help you. That will not help me, and it's not going to help anyone else. So interesting experiment that we got going here. We can look at the history of this account. We have 4 trades right now. We got 2 winners and 2 losers. This one right here, this was the trade that we took last Thursday with NFP when LJ came on and talked about that short on
that
gold.
Was one of the most impressive trades I've seen lately, by the way. I mean, I've seen him doing very impressive things. Yeah, and he's a treasure trove of knowledge, also how he comes to his conclusions. But that one was, I really thought like, wow, that was putting your money where your mouth is, really.
Yeah, that was an incredible trade, and I'm very impressed with LJ. Okay, so we are now ending the poll. We got 53% saying long. Perfect. Okay, so we're gonna go long on gold. Now, where are we going to go long? We got some ferret catcher is saying stop loss 3295. 3295 is okay. So where is 3295? Let's put that in. 3295.
Stop loss, actually.
It's below that low. Do we like this stop loss, guys, or do we want to have another stop loss? Let me know. Do we like this stop loss? Let me know. Should we have this stop loss, or should we put stop? Remember, guys, like I said in the beginning when I started this experiment, we're most likely going to be losing this account. Trading this way, it's not a good way of trading. So if you follow me, if you follow this trade, you're most likely going to be losing money. You will most likely be losing your account. And if we all trade this together, then you will qualify as group trading, and you will lose your account because of the rules of the fivers. So this is not for you to follow. This is a trade that I'm taking, and I'm just having fun. This is for informational and entertainment purposes only. Make sure that you do not take the same trade, because if you do, most likely you'll get a call from the risk department asking why do you and 100 people trading the same setup. Okay, so we have a few ideas for stop losses. We have 3298. Okay, so that is close enough to the one that we already have. Another one saying stop loss 3307. 3307. No, that's like all the way down in the depth. Like, no, we're not going to look at that. Okay, so 3306. 3306. That's a bit too tight. Okay, so what I want you guys to do now is, should we use a market order or a limit order? Okay, I'm gonna ask in the chat here, market or limit order. You're gonna go in market or limit. I'm gonna give you guys 2 minutes to answer that one. I mean, everyone's just going to select market order most likely, because you want that action and you want things happening quickly. And this is also one of the reasons why I think this experiment will fail. So we're going to use just 1 minute. You get 1 minute to decide if we're going to be using a market order or a limit order. And the two stop loss level that I'm thinking is, so I'm going to give you two options, right? For stop loss number one, we're going to be going with 3304, or below here, we're going to be using 3298. So
I like this one here, this comment by Trading Profits, buy stop, because you don't really see retail traders using buy and sell stops very often.
Yeah, exactly, and that's actually very. I mean, when I developed my EAs, I didn't really think about using buy stops, but
when you trade breakouts, it's like the go-to strategy, or the go-to order type.
Yeah, and then I saw that one of the most successful breakout strategies was using stop orders, buy stop and sell stop. Okay, so the poll is now done. We're gonna click end, and wow, okay, so 55% says limit. Okay, so now we're gonna go with limit. Now this creates a little bit of a situation, because then where are we going to place that limit? Where are we? No, the trade is not on. And please do not, if you're joining me here to just, if I see that you all are just copying the trades, and we see on, this is things that we can see. We have a very good risk management system in the back end for this. So if I do see that everyone's just copying this and trying to make money by copying the trades I'm doing here, then I might have to stop this experiment. So at least, put your own system to work, right? But I'm trying with this experiment to see, is the crowd, like, is the viewers here in the comment section, are you able to consistently find good setups? Because if you are, then that shows that because we remove the mental side of things, right? Because what we're doing here is just looking at the technicals and everything, and you're not going to be able to manage this trade. You give me ideas, and then I execute a trade based on the ideas that I get from the comment section, which is very interesting experiment, because then maybe as a collective we're actually profitable, but then individually we know that most traders are not profitable. So collectively we might come up with good ideas, but then on an individual basis, we got the mental side of things making it difficult. Okay, so now where are we going to place that limit orders? Are we going to go limit buy at a lower price, or are we going to use a buy stop order?
Wouldn't it be ironic if I get my short entry signal now?
Yeah, that would be
awesome. Fun. Actually, it's exactly what we want to see on this show, man.
Okay, so we have one buy limit at 6330.
Yeah, if we wait another 10 years, maybe that will get triggered.
Okay, so he probably means 3-3, but we can't put a limit or limit buy here because we got the stop loss down here. So we need to it needs to be. I think it needs to make a little bit more sense. Okay, so buy at 3306. Now this one I like.
Yeah, this is here what Trading X also. I think that's quite valid. You know, if you get that dip down and you think it's going to defend 3,300, that's maybe the area to try to go into.
So I will put a limit entry at 3306, and I'm going to be going into the comment section and ask, should we use 3306 as limit buy? And then you just have to select yes or no. If we have more yeses than nos, we're going to go long. If not, we're going to be selecting another entry. Okay, so we got 1 minute. I'm going to enter the order as soon as we have results here. And then after entering the order, we will work on the take profit placement, because what's most important is the invalidation of the setup. And then when we have an idea and the validation of the setup, we can actually work on the take profit after entering the entry orders. So let's see, we got about 60% saying yes. We got about 30 seconds left on the poll. So let's see what we get here. Wow, I am very big now. Make myself a little bit smaller. Let's see, we got 63%. We got 10 seconds left. Let's see if we're going to be adding that as our limit buy or not. Remember, it's the majority that wins when trading this system. Okay, so we have yes, we have 63%. I'm going to enter. And we also decided in an earlier session that we're going to be using 1% risk. We can also revisit that and go back. Okay, so now I'm going to be entering an order here for this. Right, there we go. That's now the order in. And what we want to be doing now is we want to talk about take profit placement. So I'm going to give you some suggestions on potential take profit levels. We have the first one. I think we're going to be adding 3 different ones. So just to get rid of, okay, we're going to be using one here. And then we're going to be using one here. And this one we're going to move down. We're going to be moving down here. So I have one poll left. Okay, so we're going to do I'm going to write here level 1, level 2, and level 3. And what I mean here is that the one closest to price is level 1, and then we have level 2 and level 3. So we're starting from the bottom and up. So if you select level 1, it's going to be around 3,316. Level 2, it's going to be around 3,323, and then level 3 will be at 3,330. Dirk, while we wait for that poll, I will be back in just a short while.
All righty. Going to switch over to my chart again here. So yeah, guys, that's why I said it's a bit ironic. I'm waiting here still for yeah, this one looks better. For a short signal on gold. So I could imagine actually if we see one more tick down to this area of 3308, maybe 3307, but I would get another one of those short entries here. And looking here at the price action right now on my other chart. Yeah, so that would be a little bit ironic, you know. Would be quite special to see who's right. Our community trade or my analysis here. But while we wait for Jonatan to come back, let's quickly also have a look at what we usually do here on Monday. We want to have a look also on the data we are expecting this week. Today, nothing scheduled. Tomorrow, you want to be a little bit careful if you're trading the Aussie dollar. And I think the most important, but very interesting that China is at an inflation rate of 0% already, right? And of course, most important this week, although it's like not the typical week where we can expect a lot of volatility because of news, are the FOMC meetings. Why? Because the tendency is there that we see a bit of a switch from members of the committee, of the Fed committee, from doing just one interest rate cut this year, which might come in December, end of July. I don't think we are going to see an interest rate cut already, probably in September. I think 13th or 17th of September, the next decision after this is. So down from one cut to two cuts. I don't believe that this is true. LJ and I, we spoke about this also extensively on our bi-weekly podcast every Wednesday at 10 a.m. CET on ABL Labs, AlphaBeta Labs. So if you are more interested in looking, beyond all the chart analysis, beyond price action and so on, you might want to join this as well, where we extensively talk about the economic situation and how that might reflect in the future for prices we see for the assets that we are trading. So not so much from that side. Gold also indices. I said it earlier. What I don't like here right now, actually, about the short idea that I have for gold, and the one thing that speaks that your trade there could be more the one to choose right now, is that we see a bit of a bearish structure in the NASDAQ. And usually when you see more a bearish structure in the US indices, you would see gold going up normally because it moves inversely. So this is why it's not like an 1A setup if we really get to see the short entry here. For my position, as I said earlier, normally I would probably only trade the first entries, which was this morning, this one at 3 a.m. Obviously, I didn't trade this one, but the same goes here. If I scroll back a bit, on the 3rd of July, we got a long entry here, which also was a nice trade. This one, of course, absolute beauty here, but you can see also that this system can fail sometimes. So that's why it's important to have a stop loss, and preferably a trading stop loss. I don't know if you listened right now, Jonatan. I said you guys might actually be on something there, because the one thing I don't like is that we see a bit of a more bearish structure from the US indices that normally should actually push gold a little bit higher than lower. Nonetheless, if I see a short entry here, I'm going to take it, just so we have the action of being pitted against each other.
Yeah, that would be fun. So I just ended the poll here, and it seems that 40% wants us to go with level number 1. Now, I'm not sure. I guess it's pretty good, but I would want probably to have a higher risk reward. But this is the trade that the comment section agreed on. So level 1, 40%. Then we had level 2 at 31%. So this is the trade that we have active right now on gold. So it's gonna be very interesting to see what happens here with gold. Let's see.
So did you enter anything yet? No.
Sorry?
You didn't enter a trade yet, no?
No, I got the.
By the way, I saw earlier somebody asking also again the question we get a lot here, and we've answered a lot actually, as a matter of fact, as well. The position size calculator we are using on the MT5 is, if you Google position calculator MT5, probably the first hit you'll get is from Earn Forex. That's the one you want to download. It's a free tool. It's a great tool in my opinion. Took me some time also to admit that this is really something you gotta have, especially if you want to scalp the markets, because it takes all those manual calculations off your shoulders. Where to which position size you want to choose in terms of the stop loss you have placed and the risk you're willing to take.
Yeah, it's great, and it's
here we have
I have the
link.
URL
nice.
in the in the comment section right there. So you can go in the comment section, just click that, and you'll get you right to the website where you can download the EA. Now it's really cool because you can.
I have a short signal on gold, guys.
Nice. Okay. So it seems like you're getting the short signal maybe at the same time as we're getting.
I'm much too late, of course, entering this one because I was slacking here. So I entered at 3306.66. My stop loss is at 3317.
Wow. So your stop loss is, because our TP is 33. You know what? I'm gonna go in, and I'm actually gonna go in, and I'm gonna change the stop the TP to 3317.
That would be funnier.
Well, look, that's the, because we had it at 3316.95. So now it's RTP is your stop loss. Where do you have the TP? Where do you have
my TP is flexible. I'm using a trailing stop loss. Yeah, I might actually manually close it if we see, I don't know, something like 3395, 3390. This comment, by the way, sounds a bit like Yoda. Dirk, read the candles, use the force.
Okay, interesting. We have a lot of people being short. Look at that wick right there. We're gonna go into 1 minute. Look at how it just missed our entry right here. I think if we just can go a little bit lower, I think this is a really good entry for a long. I really do like the idea of going long, but maybe that's it. Maybe we just missed our buy limit with yeah.
Man, I was talking, not paying attention. I could have entered actually $2 higher almost.
Yeah.
But c'est la vie. This is what it's called slippage in your analysis. Not just between you clicking and the order reaching the exchanges, but also between you talking or me talking and my brain realizing, oh, I should click on the short button there. But let's see. As I said earlier, it's not an ideal signal. Normally, I only want to trade those first signals I see on my Renko chart appearing there. But for what it's worth, let's see if I'm going to put my risk metrics a little bit to the downside again.
Wow. Okay. If this is truly like, so what I expect is like, if that level,
how much did you miss your entry by there? That is insane.
Oh, I don't even know. Like, seems like less than the pit, less than the
really?
spread.
Yeah, but this is how things are. I mean, now we're getting the down candle a bit. No, oh well, they are fighting.
Yeah.
But finally, we're getting a little bit of action. I mean, that was such a boring trading session up to now, no?
Yeah, it really was.
That's the one thing I don't like about being the first one to stream every week.
Well, but I mean, you find the right markets, and you find. I mean, you got to be on the lower time frames if you want that action on like the Monday. Yeah. Because Monday is usually a bit slow, but it also depends on what happens over the weekend. I'm sure that we go to oil, we're probably going to see some interesting things happening, especially if you're trading in the. I think most of the volatility is like at around the European Open on a Monday, and then it kind of slows down a little bit. But yeah,
but you don't want me to trade oil, really. It's a guarantee to crash an account if I start trading
really?
oil. Yeah, it's like that's the one thing. There were actually two things when we started this whole thing a couple of months ago, and I asked like, "What do you want me to trade, guys?" And I thought, oh, please don't say oil. Secondly, please don't say gold. And of course, it ended up being gold, which turned out to be good because it kind of forced me to sit down again and really go through this whole exercise of analyzing, is my existing strategy actually working for this asset? What do I need to modify? Go through the backtest cycle, and then, basically reinvent myself as a trader, which is something very refreshing if you have done this for such a long time. So,
oh wow, look at that again. Like, imagine if this is the actual low. Like, we're not going to go. It is obviously very close here, very 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 close.
Yeah, but it is what it is. Either you get executed or you don't. I mean, that's part of the game, no?
Yeah.
Let's see. This could be interesting. Really, I would like to see this dip now down to 3,300. See if we can crack it. One thing I would take into consideration, actually, since this is not like my preferred trade, if we really see the market dipping down to 3,300, I might be tempted to adjust my stop loss to break even on this trade, actually.
Yeah, I think that's a big move to the downside. It's an important level. I mean, if we're looking at it from a low time frame perspective, we should get a bounce down there. So I feel like if we go down to that level,
that is so crazy. I think you're going to get executed now.
Yeah, I mean, if we're not going to get executed on this,
that would be insane. I mean,
yeah, if we don't get executed on this, then I will just, I guess I will stop trading. You know, it's going to be extremely frustrating. Yeah.
I don't know how many times I said that to myself.
If we don't get filled here, I will just end the live stream and go on 6 months vacation. Oh, there we go. Come on.
Rage quit.
Oh man, it's so close.
Oh, that was still not it.
Wow, that's now it's right on. So now it's
right
just
on.
spreads. Now it's just about a spread, which is, we're on the 1 minute here. I don't think the spreads are very wide. So
I think it's like 0.2 or something.
Yeah. The issue I'm having here is the fact that, right now I think it's around 0.23, which is not a lot. The issue here I'm having is the fact that we see that this is a good support area.
Yeah, but on the 1 minute, I mean, it's like.
So
if you scroll back, I don't think it's really you find that anywhere. Maybe to the very left where you have this one gray candle.
Well,
okay. I mean, yeah, sure. Yeah. Mm-hmm. Which means if we are breaking below that, that would be very beneficial for me.
This is a great comment. Why does this not happen with stop losses?
Yeah, really. Yeah.
It only happens with the entries. Well, okay, so that's close. That's very, very close. It's double bottom on the 1 minute here.
But it shows again, the difference between trade idea and being right with a trade idea, and then the execution.
Yeah.
If it really goes up, I mean, my actually. When you ask about shall we use a market order or shall we use a limit order, my notion was like, if I trade on so low time frames, I usually would go with a market order because I want to be in the trade. And of course, you could be unlucky, and in the moment you click, prices jumps up or down. As I had this on my short trade right now, because I was too slow, I got executed like $1.50 lower than my entry could have been. But for me, it's more important to be in the market. That is crazy, really.
Yeah. Imagine if this is actually the. Wow. Okay. I think we just had one of the most frustrating misses of an entry on gold.
Give it a little bit. I mean, we're just talking about a very little move here right now. Which one is your entry precisely? 3306, correct?
Yeah, 3306. That's right.
It's really funny. It's really the reversal of my trade. Yeah.
Wow. Okay. So, I mean, the problem now is the entry is not as good of an entry because now we have tested that entry multiple times. So if we break below that level now, it's probably going to be a bigger move to the downside. So we've like the reaction that we wanted to see at the level has already happened. So if we revisit the level, the entry is not as good anymore. So we'll see.
Yeah. Also, if we go down, we have a continuation of the downtrend. New lower low again. Although, I mean, you're looking at a 1 minute chart there. Yeah. You're trading against the trend, my friends.
I don't think we are. I don't think we're trading against the trend.
But I very much think you are trading against it on the lower time frames.
Yeah, well, okay, we are on the lower time. Well, I'm not
on the higher, of course. Yeah, I mean, totally on your side. Swing trading wise, look for long entries.
I don't like. Yeah, I guess there's definitely a bearish characteristics to this whole range.
I mean, again, we are back to what we discussed earlier. The analysis depends on the fractal you're looking at. Can I put it like this? Like, am I looking at the price move of the last half hour if we talk about a 1 minute chart, or am I looking at the last 24 hours? This is going to change my analysis.
So, guys, what would you do in this situation? Because remember, you're in control of this trade. This is not
your trade is your friend until you meet another trader. Nice.
Okay, that's a very good saying. Okay, so this is not my trade. This is not my trade. You're in control over this trade. So, do you think we need to do anything differently here? Are we going to react on this, or are we going to wait? Let me know in the comments what you think. What we're going to do. So yeah, the EMAs on the chart here, it's not something I use much. I don't really look at the EMAs here on MetaTrader. I have them. I'm not sure why I have them on here. I've just kind of it's so complicated.
A relic still from Alex, maybe.
No, I mean, I've always used the 20 and 50 EMA, but it's just that I'm just lazy and MetaTrader is just so horrible that I just haven't taken the time to remove them. But we can probably, I don't even know how to remove them. So yeah, that's that. That's that.
It would be great actually if TradingView would be able, as a trading functionality platform, to do what MetaTrader is doing. Because when it comes to the actual trading, MetaTrader 5 especially is far superior to TradingView. With TradingView, you always have these connection issues and very laggy executions. And yeah, but the charting, of course, is much better on TradingView. Cancel and go short, says Luck.
Oh, no way. I'm definitely not going to go short.
Short. Come on.
No, like I Okay, let's make a new poll. Let's make a new poll here. Should we make changes to the setup? Okay, so another poll. Got 2 minutes on that one. And the poll is, should we make changes to the setup? And then if it's a yes or no, we're going to make changes based on that.
If we go, if we bounce from here, no, I'm not going to say anything now. I don't want to influence anybody.
So I think we have an ICT trader here saying bullish change of character. Now,
this is what I was already.
It's another word for break of structure, right? A structure break, like a market structure break.
He meant I have a bullish cock. What? I mean the animal. My God, your dirty mind again.
Dirk, you're gonna get us banned.
I actually really meant the animal. I was referring to, this one YouTube channel. There's a guy, he has a chicken, and this chicken picks out his trade once a day, and he tracks it.
Yeah,
really.
Yeah, I know that's a good one.
Nobody's going to believe me that now, but it's really. I didn't have anything dirty in my mind. Please, dear YouTube algorithm,
no.
Don't ban us.
Okay. Well, that's interesting. Okay, so we're gonna go to the poll here. Should we make changes to the setup? 53% says yes, Well, we have a short there. Gonna tell Marco, gonna make a short out of that one. Let's make.
Oh, please don't.
Let's make those.
Then I'm going to get banned on YouTube.
I think. Yeah, I don't know. Okay, so we're go. Okay, so 54% says that we're gonna make changes to the setup. Okay, now let me know in the comment section what type of changes are we gonna be making to the setup. What I would want to do is move the limit here, but that's too late. That's too late.
Now we're getting the real questions here, actually.
Yeah. Can a prop firm allow a chicken to pass evaluation and get funded?
There was an experiment very long ago. I'm talking like 20, 25 years ago, where they pitted a monkey who was throwing darts at a newspaper against Wall Street analysts in terms of who's going to perform better in picking stocks, and the monkey won.
Yes,
and the monkey was named Dirk.
Was it really? No. No. Okay, so. Oh my god!
I'm getting a bit silly here. Sorry, guys.
Yeah, it's getting weird. I like in the middle of this, like, hi guys, what conference are you? Yeah, monkeys and other things is what we're. Ali says, please hold. Yeah, we can hold, but we're not in a position.
Yeah.
Okay, so back to the question: Can a chicken? Is it allowed for a chicken to pass an evaluation with a prop firm? Yes, 100%. If you are able to, well, first of all, get a KYC the chicken. You know, you get it a citizenship, gotta get it a passport. Like, gotta KYC the chicken. And then let it go.
It's got to come on the live stream also then.
Yeah, if you
share its strategy.
Now I can probably set this up with you and kind of like not KYC the chicken. You know, maybe we can use it as like you're the owner of the chicken and only you have the KYC, and then it's like you use the chicken as your like almost like an EA, like a trading tool, and then but then you have to come onto the live trading room. If you're able to train a chicken to trade, yeah, definitely we'll get you funded 100%. Come on the live stream. Let's do a chicken trading show. Let's and then you're gonna name the chicken feed. Gonna name the chicken feed.
And if it fails, you still have a nice Sunday chicken roast you can have.
We're not gonna kill the chicken, only if it loses the account. If it loses
that's what I mean.
Account,
if it loses the account,
chicken, we'll roast the chicken, then we'll eat the chicken live right here. Or the chicken feed party. And to be honest, if it makes money, get fine. I'm probably gonna eat the chicken anyway. Whatever happens, we're probably gonna be eating the chicken. So if you have a chicken, you're gonna be, we're gonna be eating the chicken anyway. Whatever.
It's just too yummy, guys.
Yeah, it is. Like chicken.
Oh, probably now we are going to get bashed by all the vegans out there.
Yeah, if you're a vegan,
activist.
If you're a vegan, I mean,
sorry, but not sorry.
Yeah, just eat meat. Let's start eating meat.
Get more protein in your body, please.
Get more protein in your system. You want to make it in trading, get better. Better eat healthy.
Isn't your CEO a vegan as well?
Mickey from Trader Pool is a vegan.
Mickey it is. Yeah. I thought it was Saul. Yeah.
No, Saul could be vegan, but I don't think he is.
I mean, he looks trim and lean and fit now.
Yeah. Definitely. Maybe he is a vegan. I don't know. Probably not, because like if he's a vegan, we would have known, because if it's one thing that vegan really loves to do is to tell you that they're vegan. I mean, Vicky, for example, he has like a that's like a
we are like it's like a checklist of all the cliches, and we are
he got a painting in the background when he streams that says like vegan, like I love vegan or something like that. So
Victor's a vegan. I didn't know that.
No, Mickey, not Victor.
Mickey.
Mickey.
Okay.
Yeah. Okay. So when is the next giveaway? The next giveaway is when we hit 80K subscribers. So make sure that you go in and you subscribe to the channel, when we hit that 80K, we're going to be doing a massive giveaway. Every 10K subscribers we get, massive. The trading room is not going to be canceled. I mean, the views are just shooting up. What app? Oh wow, look at that. What app and broker are you using? Are there any differences between brokers? So you are joining the Fivers live trading room. The Fivers is a proprietary trading firm, a funding firm. We are using a combination of different liquidity providers. We're not going with one broker. The platform that we're using here is a MetaTrader 5, and that's what we're using, MetaTrader 5, and we're using our own price feed from a collection of different liquidity providers. May I say, some of the biggest liquidity providers that is in the trading industry. Okay, so.
Well, I gotta say, I mean, the limit order was really good chosen for the long one. I mean, unlucky that it didn't get executed, but that was on the point, I would say. It's just one of those things, where you got unlucky. But as you said earlier, if we should go down to that area now again, I wouldn't execute that limit order anymore, because then there's a high chance that we are going to see lower prices again.
Yeah, okay. So this is rather depressing because we have the limit order right here, and I actually, when we voted to change the setup, I wanted to have my limit order here. So, and that one would have been filled.
It's like somebody said earlier, if that would have been actually a stop loss, if it would have been executed.
Yeah, because it's always like that.
And it really would have, because I mean the spread would have been the other way around then, working.
Right. Yeah, that's right. That's right.
But this is also, I mean, this is an example why it's so important to not just look at what happened at the last trade or the last 2 or 3 trades, but to keep your statistics. And to, for example, if you are already trading an evaluation account with the Fivers, to look at your hub and to look at your trading statistic to see okay, these are my risk metrics, for example, for the last 50 or 100 trades, because it filters out this notion that we have as human beings, that we like to put too much emphasis on what happened the last time. Yeah, you would probably hear a lot of new traders now telling a story every time I have a limit order, I don't get executed, the market turns around shortly before my entry is reached, or I get always stopped out and then the market turns around into my direction again. That's why it's so important to look at what happened in the last 50, 100, 500 trades. If you are not using an automatic solution, it's a good exercise in the beginning also to just, keep a notebook like I'm using here, manual one, and just take down your trades, which is something I do up to this day because I'm, basically old.
What I'm going to do here is I'm going to remove the orders here. I think the trade is gone. I'm not going to click this. So I'm going to remove the order here. And let's see if we have any questions in the comments. What advice would you give to beginners? Okay, so basically, what advice would you give to beginner traders? Is it good to start trading crypto market or gold? Okay, so I think that crypto is a complicated market. Now, I do say this from the perspective of someone who's been trading crypto for 8 years, and I started trading crypto. That was when I started trading crypto, and I still trade crypto. Now, what you need to understand from in the crypto market is that you have a lot of different altcoins, but you're probably just going to be focusing on maybe, probably 10 to 50 altcoins, depending on what your system, how you scan the markets or something like that. But I mean, you're probably going to be focused on Bitcoin, Ethereum, and then, a bigger list of altcoins. Now, what you will notice quite quickly in the altcoin market is that when one altcoin moves, the rest tend to follow. Now, you will have some that is showing relative weakness and relative strength, and those would obviously be interesting to trade. But correlation is a big, not an issue or problem, but it's a big challenge when trading the crypto market, because when you say crypto, I'm thinking, you want to be trading altcoins. So I would say that trading crypto is very different from trading the forex market. I think that the forex market is actually a little bit more structured. It's at times it's much more easier to trade forex. There are times when you are going to have an easier time trading crypto. For example, when let's say Bitcoin is in a bull market, Bitcoin has just broken out, maybe it's consolidating above support, and altcoins start moving, and altcoin is they're in a trend, then you want to be trading altcoins and you want to be going long altcoins and you would be trading with that trend. But when the crypto market is like quiet, maybe Bitcoin is in a ranging structure with a lot of volatility, then altcoins are going to fluctuate a lot, both up and down, and there's not going to be any like super clean and clear long-term trends. And so for new traders, I would actually say that I would probably look at forex market to begin with. I think crypto, a lot of people think that crypto is easier to trade just because it's the new market, and you go on social media and see everyone's shilling crypto and everyone's in crypto, but they're not trading crypto. They're making money to advertise different crypto products. So they're not trading crypto. You see a lot more trading content in the forex market, because I do think that, especially now with the funding firms and everything, it's much easier to make money and trade consistently in the forex market. With that said, Bitcoin and maybe Ethereum does offer a lot of interesting trading environments, but it's not easier. It's not easier in any sense. Every market has its own challenges. So whether you be in the crypto market or forex market, it's still going to be very difficult, and you really need to understand the nature of the market that you're trading. And again, in the crypto market, it's all about finding those altcoin windows, right? It's finding the right opportunity and the right time to be trading. In the forex market, you can trade pretty much every day. If you're having a low time frame system and you're scanning the markets effectively, you can, if you want, trade every day. But I wouldn't say the same for the crypto market.
I would actually, and if I may add to this, before you start trading, I think it's important that you understand the assets and the markets that you are trading. So, for example, if you choose, I want to trade cryptocurrencies, I want to trade Bitcoin, understand first of all what is Bitcoin, understand how does an order book work on a crypto exchange, understand what is the funding rate, understand what is the spread. This is of course also true for forex pairs and stocks. So really understand the assets you are trading, because that will lead to you, for example, when we look at funding rate, to stay out of the markets when funding rates go crazy in crypto. It will tell you also what is the market bias at the moment. If we look at forex, I bet 90% of retail traders that just started trading, if I would ask them okay, what does it actually mean when you go long euro dollar? They probably couldn't answer the question that it means, I'm buying dollar and at the same time, I'm buying euro and at the same time I'm selling dollar. So I would get credited on my account, and this is what happens in the spot trade normally. You just don't notice this on a broker. I would get a credit plus euro on my account, and my US dollar account would go into minus. What is a swap? How come sometimes I get interest rates for forex positions, and sometimes or more often, as a matter of fact, I have to pay. So understand really what an asset class is, how an asset class works, before you go into developing your own trading systems, or even risking your own money already with trading. I think that's very important. And probably also the reason why a lot of people don't like fundamental analysis, because it actually takes some effort to understand, and it's not as easy as looking at, is the RSI over 70 or below 30?
Yeah. Another question: why would you pay more emphasis on demand and supply zones irrespective of the candlestick pattern, or is it better to take? I don't really understand the question.
I think he means like if you see like a bearish engulfing pattern, would you look
yeah,
at
a bearish engulfing candle at support is not really a bearish engulfing candle. It doesn't
exactly. Maybe the question goes into that direction, you know.
Oh yeah, so
or look at confluence,
yeah, I mean,
for example. You had a support, you have a bullish engulfing pattern, and so that would be confluence then, no?
Yeah, I mean, so this question is a question from someone who obviously does not have a trading system. And I've been in this industry for what feels like a very long time, but then you talk to Dirk and you're like, yeah, okay, I'm a newbie at this, but still, I've been in this industry for 8 years. I've always loved the idea of helping people, and I feel like I've always liked the concept of the idea of like explaining concepts, and that's why I quite early in my career started sharing what I was doing in trading. Like long before I was even profitable, I started sharing everything online that I was doing, my journey, and then when I started becoming profitable, I wanted to share what I was doing that was working in for me in trading. So what I did was, I created a couple of like courses on how to learn how I was trading. But eventually I started moving away from that because I saw that it's a flawed concept. I can't create content where I show you how I trade in my system. Because that's not really how I learned to create my system. Now, the way that I learned to create my system was, and it took a very long time because I went through this idea of, in the retail trading space, there's this idea that you go on YouTube and then you follow a specific person and you learn how that specific person trades, and then you copy how that person trades without understanding the foundations for his system, without understanding how did he create the system. So you kind of have to you have to do it differently. You have to start at the very basics. You have to do research and education on technical analysis, and you need to understand the concepts of technical analysis. First learn the basics and then learn the indicators, and not only how an indicator works, but how it's created and how the indicator was created, to really understand how it's working. When you have a good understanding of technical analysis, that's when you start to put pieces together. That's how all the other guys are doing it. That's how they created their system. So they create a system, and then then they teach you that system, but you're supposed to do the same process as they did. So you need to go back to the basics and really understand technical analysis. So what I would recommend that you do is look for books on technical analysis. Now, if you have the money and you have the time, I would highly recommend CMT, but the CMT curriculum is like $200, and then to go through all the courses, it's going to cost like $5,000. And if you have no interest in becoming a technical analyst as a profession, then that's probably not for you. But there are books out there. I know the one by like Technical Analysis of the Financial Markets by Murphy, I think, is a good one, right? To understand the concepts of technical analysis. And then what you do is you try to find a combination of different things that works in the market by finding proof and backtesting. That's the only way of doing it, okay? It's a very long journey. It's a very, very long journey, but that's the only way of doing it. So the question that you have right now, you can test that. You can test that, right? You can go and backtest, and you can check like supply and demand zone. You look at supply and demand zones, and then you see what is the probability of seeing a bullish reaction at support if there's also a bullish engulfing candle. And then you go through like 100 or 200 examples, and you look at the statistics, and that's where you'll find the clues on what's working or not, and how you can build that system. It's yeah, that's what you should be doing. Yes, this account is an evaluation account. You're absolutely correct. We're doing an evaluation here live with the audience. We're asking the audience to help me decide on what trades to be taking on this evaluation.
I mean, the question is what do you expect Jonatan to do? Like, do like a community trading type of stuff on a real account, risk his own money or risk the company's money? I mean, come on.
Yeah,
be a bit realistic, no? It's more than we share here our personal performance, our personal trades also very often. So please stay a little bit reasonable.
I've also more and more moved over into algorithmic trading. So I'm not trading that much manually anymore. I'm mostly trading, the higher time frames and swing trading manually. And when the simple reason for that is I'm seeing so good results with my algo trading that I feel like I would rather the time that I've put on manual trading, I would rather put that on improving my algo systems at this point, because the results are actually better. I'm actually getting better results on my algo investments. Also, I've changed a lot as a trader over the years, and I've seen that I kind of need to think about the future as well. I need to think about like where I'm putting my money long term. So what I've done is I've changed a lot in the way that I'm structuring my finances and how much I'm investing into my trading account. A couple of years ago, I probably had like 75% of my net worth in trading, which I've realized now is far too much. So now I'm looking at more like 10% on my active trading account. So like 10% of my liquid assets, if you will, is in active trading. The rest of it is in long-term investing, where I have about 60% in stocks, about 30% in gold, and around 10 to 50% in Bitcoin. And what I'm doing is all the profits that I'm making from short-term trading, I'm moving into the long-term investing. And I think so. It's kind of like a funnel, right? Got the short-term trading, getting the payouts into the long-term investing. That's because I've seen that if I spend more time on developing the algorithms and making money from the algorithms, then I can, funnel that money into long-term, investing and savings account to start building a pension. Because I have my own company and I'm a trader, so I'm, got to think about the future as well. Got to build up that capital long term.
Or go on to Wall Street bets and degen it all in weird options.
Right.
No, just kidding, of course. This is really important. And I mean, I'm repeating myself so much nowadays. We are at a time now, right now, where it's easier than ever to quickly analyze your own trading strategies with the help of AI. It's very easy. Everybody can do it. Yeah, you need to probably spend a day or two to kind of learn how to structure data or how to spot mistakes AI can make, because AI models, especially language models, are kind of trained in a way that they want to always encourage their users. If you've used ChatGPT or Claude and you point out mistakes, you'll very often hear from them saying like, "Oh, you're absolutely right. You have such a good eye on noticing that." It doesn't mean that you're right, actually. It's just the way they are designed. So be a little bit critical there. But use those tools. They are going to tremendously help you to backtest your strategy, to develop your strategy, and to find different ways how to modify your strategy also until you find an edge. And then the next step is, like Jonatan said, in my opinion, at the moment, to to create algo strategies that trade 24/7, that trade when you cannot be in the monitor. I mean, you saw that earlier with my trading system for gold. That trading signal was at 3 a.m. in the morning. I'm not in front of my, I'm 48 years old, I'm not sitting at 3 a.m. on a Sunday night in front of my trading screen. I think my wife probably would stab me in the back, righteous so. And I don't want to do that anymore. So you need to automate things eventually, except maybe you have only like a 2-hour, 3-hour trading window during the New York or European session for your strategy every day. But that's the way to go. It's easy to do that nowadays. So please do it, and don't ask the same questions anymore that retail traders have been asking for 50 years, probably for hundreds of years now. Oh, can you give me a simple trading strategy that will guarantee me profit?
This is one of those questions. You have here. Should I just use market structure, or can I rely on indicators to make trading setup? So this is what I've talked about before, right? So there's no simple answer to this. Well, actually, there is a simple answer. Yes, that's yes. That's the answer to this. Now, it's not the answer that you want, because I don't know who you are. I don't know how you look at the markets. I don't know what time frames you're looking. I don't know what markets you're trading. I don't know what you know about trading. But should you use market structure? Of course, you should use market structure. Should you use indicators? Yes, of course. If they work, then you should be using them. What you have to do is you first have to understand what is market structure, learn and understand what market structure is, and then how to use it. How can you use market structure analysis in your trading? But if you're a manual trader, a discretionary trader, then I would say that the chances are that, yes, you should be using market structure, and then you would be adding indicators on that. But you have to understand the principles of technical analysis, and then you start working on a system. One of the reasons I believe that there's such a high failure rate of traders in this industry is because the 95 to 97% comes from the idea that there's a rule that says, I don't know if it's in the US and the EU, or if it's the same, but there's a rule that says that brokers have to disclose the failure rate of their clients, in a sense. Now, we're not really sure exactly how they report that figure, because there's going to be some difference between different brokers on how they report. But some say 95% or 97%. That could be like 95% of traders lose money after a year, or lose money on a daily basis. So if it's on a daily basis, you look at the brokerage and you would say that. But yeah, there's different ways of calculating this. But what we can say is that the failure rate in the trading industry is very, very high, probably higher than 95%. So why is that? Well, that's because most people are a little bit too lazy. They're too lazy to really put in the work. To become a trader, basically, it's the same thing as starting your own business. Okay. One of the reasons, if we ignore the idea that it's difficult to come up with an actual business idea, ignore that. Let's say you have a business idea, okay? You have a business idea, and that business idea is, I want to trade. So you're going to be starting a business. Now, you need to register the business. You need to come up with all of these things around the business, with accounting and everything, and make sure that it's running smoothly and it's generating cash flow and everything's working. It's a lot of work. And it's the same type of level of commitment in trading. So if you're going to be working a job and then trade on the side, you're going to have a very, very difficult time to really learn how to trade. And especially if you try to learn how to trade by buying a course for someone that has already gone through the process, because you need to go through that process as well. So that's a very... When I get, yeah,
it's like, really, I always, like you said, that for me that was the most important piece of information there. It's because of laziness, and I don't mean that in a bad way. It's our, like, this is how we work at humans. As humans, when we have an excuse, we tend to be lazy. We tend to be in a state where we conserve energy. if you want to put it like this. And it's the same when you learn a language, and there are extensive statistics about this as well. When learning a new language and you try to do that on your own, for example, 90% of people fail learning a new language by themselves, not because they're not smart enough, because they are not disciplined enough to accept that it's going to take 6 months or a year until they reach a level. So they basically spend like 100 plus hours, 200, 300 plus hours until they reach a level where it starts paying off for them. And it's the same with trading. This is why so many people are asking here on the live stream the question, oh, share your strategy with me. Is this or this better? It's always aimed at finding the easy way out of something. And there is no easy way out of something. Even if you have a coach on your side, maybe those 90% I'm talking about learning a new language can drop to 80% failure rate, but it's still very high because it depends on really yourself, your discipline, and your willingness to put hours and hours and hours of learning and development into this without the guarantee that you'll even succeed. I see that myself right now again, and bear in mind that I've been doing this for 26 years. I'm automating some of my strategies for the reasons that Jonatan said earlier also. And my first strategy to automate is a Bitcoin trading strategy that is also based on the indicator that I was showing you before that. Now I'm developing a crypto trading bot for this from zero, really, because there is no ready-made solution that I'm willing to use there. I want a solution that is really my own, where I'm not depending on some software company out there, that could cut my access or copy and steal my source code at any time. And I've poured into the strategy just for the coding part. I'm not even talking about developing the strategy, just for coding this crypto trading bot over 100 hours. Why? Because it's a much bigger project than I anticipated at first. And the bug fixing, the debugging thing takes at least as long as the developing of a code as well. So why am I saying this? Not because I want to tell you, oh, I'm so great, I spend 100 hours creating a crypto trading bot. I'm saying this because I even don't know yet, are these 100 hours plus that I've put into this project going to be worth it by the end of the day? The back tests look very good. What I traded manually looks very good. But that's still no guarantee that this crypto trading bot is going to work. And this is all what I think business is all about. You have an idea, you follow that idea, but there's no guarantee that this idea is going to make you money. And this is very frustrating when it comes to trading, because we are kind of used to that we want to have a reward in a timely matter for what we are doing. It's the curse of the TikTok generation nowadays, in my opinion, that a lot of people, and I'm counting myself towards those people, actually are used to having an instantaneous gratification, an instantaneous dopamine boost when they are doing something. And if I don't get that, it's very hard to bring up the discipline to overcome your personal boundaries.
Yeah, no, I think.
And yes, I'm totally aware of that, Tommy. I just said this. Up to now, I've been coding 100 hours plus on this. Depends, of course, on the size of a project. Yeah, if it's like an enterprise-grade software, of course, you can probably take that by 30 or 40.
I'm going to switch over to your screen quickly, because I will just switch over to the main account I have for the EAs to see if just to show. Okay, I'm going to switch back now just to show what trade. Yeah, sorry.
It was like, oh, okay, I need to explain something now.
I needed to switch screen just because I didn't want to show my
understandable
my details. Yeah. So it has right now, as you can see, it's we almost took this to passing, but then it entered a drawdown, and I'm now in the process. So this is my forward testing phase. I've been back testing everything for about 6 months with good results, and now I'm in the forward testing phase. And I'm also going to go into my dashboard. So let me just log in and log into the dashboard, and I will show you. The dashboard of this algo portfolio that I am running. I just have to go through the. It's asking me if I'm a human, and then I have to click all the images, and I'm not getting through. I have to click bicycle.
Are you a chicken?
Why I'm clicking the bicycles? Why I'm not getting through? Oh, really? So now I don't know what. Okay, bicycles. Come on, guys. What is this?
Because you click on the humans on the bicycles as well, right?
Well, I'm clicking on every image that has.
Because I'm saying this because I always have the same issue. Click on the motorcycles. When I click on the motorcycles, and when it comes with a new capture.
Try again. Okay. Now I'm clicking. I'm making it simple. Okay. Traffic lights. There's traffic lights everywhere. 1, 2, 3, 4, 5. Like, how many traffic lights are there? Try again. Bicycles. Okay, 1. Oh my god. Is that a bike? Yeah, that's a bike. Okay, next. Okay, I'm in. That took me about 10 tries. Wow. Like, it wants me to say that I'm a human, but yeah, traffic lights are definitely the worst one. It's very, very annoying. Okay, I'm in the. I know you can see MetaTrader, but I'm in the background here watching the dashboard. Okay, so let me open up the dashboard here. Okay, so you should be seeing the dashboard here. So here, as you can see, this is the algo portfolio, and all of these small trades here. This is just testing the signals and kind of testing some things. And then you can see that you had a nice little run up to the upside here, and now we're in this drawdown. Now this drawdown has been going on for a while now, since June the 3rd. It's still in a tiny little profit here, apparently. But what I'm working on now is I'm working on a risk management for this system, and I believe that that's going to be the most difficult part of this, because I have 5 different EAs. I got one on gold, got one on NASDAQ, one on US30, one on GBP JPY, and then one on USD JPY. So 5 different EAs. Now, this one, for example, is a bit weird because it had a buy stop order right here, and then it kind of removed it. So need to work a little bit about on that one. But what I need to do now is I need to look at every individual strategy. So because every individual strategy has just a small edge. So every individual strategy might have a Sharpe ratio of like 0.6 or 0.7, which is not good. I mean, it has a positive expectancy, and it is profitable in terms of profit factor, but the Sharpe ratio is below 1, which is not a good sign. You want to have above 1, preferably like 1.5. But what I find is when I take all of these 5 EAs and I combine it into a portfolio, that combined portfolio has a Sharpe ratio of 1.6, which is very, very good. Now, what I need to figure out is I need to figure out the risk management of each of the individual system. And the way I'm going to do that is I'm going to look at the risk-adjusted return by factoring in the volatility of that specific strategy. So if one strategy has a very good profit, but it has a very high volatility and a high drawdown, I need to obviously lower the risk of that system and do the same for the other systems, but then make sure that the combined risk management of everything in the portfolio is not creating a bigger drawdown than possible. So right now, I've combined all of this, and Without the USD JPY EA, the drawdown, if I take 1% per trade, is max 10. Now I've gone back to like 2003 in backtesting, so quite accurate data. So the drawdown is then 10%. But if I add USD JPY, the drawdown becomes almost 20, which means that USD JPY has a very big drawdown. But the profit of the whole portfolio with USD JPY goes up like 50%. So as you can see, there's a lot of work to be done when creating an algo portfolio. It's not just about finding an algo that is profitable, putting a risk on it based on drawdown, and then start trading it. You have to look at each individual EAs, put them into portfolio, and then see what is the expected drawdown and profit and Sharpe ratio of the combined portfolio. I'm slowly but surely getting there, but it's so much more complicated than I could ever have imagined, and probably more complicated than creating a specific trading system to trade manually. So I think creating a system to trade manually, probably much easier than this, but the upside to having an automatic trading portfolio is obviously going to be huge.
Yeah, but it's the way to go, and I cannot highlight enough how important Sharpe ratio is, because this is there are other risk metrics which are going to tell you the same. I think the Sharpe ratio is just one of the more famous ones out there. You could do something like Sortino ratio or something like this as well, but let's stick with Sharpe ratios. And if you run a hedge fund, for example, and you are thinking about onboarding a strategy for that hedge fund, you usually always would look for a Sharpe ratio of that strategy of at least 1.5. Anything over 2, we are already in territory where you really need to look into the data, because that is like exceptional. I'll give you an example. I have one strategy that has in backtest right now a Sharpe ratio of 5.5. And I'm implementing that one right now. But in my mind, I'm already thinking like there must be something that I overlooked, probably. So if I end up at like just 40% of those 5.5, I'm already obviously very, very happy, because that puts me over 1 in the region of 1.5. But it is like, if you use, for example, language models, if you use ChatGPT, for example, to do these backtests and get these risk metrics, and by the way, include also something like spread, slippage, commission into those backtests, which is very often forgotten in development of trading strategies, then let it calculate also what is my Sharpe ratio, because it's basically risk-adjusted return. And just like in business, you want to see a positive expectancy for every dollar or every euro you risk. You know, if you run a business and or let's say I run a business, and I will tell you, you know, for every euro I'm risking in my business, I have an expectancy of just getting back 0.6 euros, so 60 cents. You probably would tell me also, so why are you doing that business? Doesn't make any sense, Dirk. Statistically, over time, you will probably lose money. And this is exactly the reason why you need to be above 1 with your Sharpe ratios. And you can do that either with, of course, with a single strategy, with all the risk that I just mentioned involved, or which is actually very smart, to have a portfolio of different algo strategies. Of course, different algo strategies that do not do the same. You know, they need to be in different markets. They need to have different underlying strategy. If you run the same strategy just on different markets, you're probably not going to see much effect on your Sharpe ratio. And in the combination, then look for something like, do I get a Sharpe ratio of 1.5 if I combine strategies with a certain amount of portfolio weight? And this goes over, knowing when is which strategy going to outperform the other strategy. This is also in large places, in large parts, trying to develop a risk management strategy by the end of the day. And it shows how important that is. And I always still return to that to that statement, risk management is even more important than the strategy itself.
Yeah, definitely. Risk. Yeah. I mean, 100%. Risk management is so much more important than the. Well, okay. So, I would say they're equally important. I think when we say risk management is more important, I think what we say is, please pay attention to risk management. Of course, you need a system. I mean, without a good system, then risk management means nothing. But the fact of the matter is, you can have a bad system be profitable with good risk management, but you will never be able to have a good system be profitable with bad risk management. So risk management is always going to be the top priority, and it's a good example of that, of what I'm doing here with my trading with this portfolio. All right, guys. So we got coming up. We got AlphaBeta Labs. We have 2 traders in the background waiting for you all. Okay, if you're ready for Mike and LJ to come on stage, and I know that Mike has promised to perhaps he's got a lot of things going on, and he has promised to perhaps do one of those TikTok dances for you all during the live trading show here today. So if you want to see Mike dance, let us know in the comments. Say, yes, please. We want Mike to dance today. LJ. Yeah,
I want to see him dance to I'm a Barbie Girl, actually.
That would be cool. I would love to see that. Awesome. I would love to see that.
Never gonna happen. Never gonna happen.
Come on.
LJ, he's so serious, man.
Such a letdown. My God. I think he got up with the wrong feet.
Okay. Morning. Okay, and we see that the views are spiking, the likes are spiking, the views are spiking. They are loving the prospect of Mike potentially dancing here during the live trading show. I'm sorry, Mike, I'm not supposed to put you on the spot like that, but I am going to do it anyway. Okay, guys, see you in a bit. We will. I will be back tomorrow. Dirk will be back next Monday. Maybe he'll jump in and say hi throughout the week. But I will be back tomorrow.
Let's see. I'm still in that gold short. So
will I be back later? Maybe I'll be back later. We'll see. All right, coming up, ABL. See you guys in a bit.
Why am I on my own? What happened to LJ? What happened? LJ, where'd you go? Okay. Anyway, that was me dancing. Oh, here he comes. He's coming back. All right. LJ, what happened to you? I don't know. Where'd you go? Where'd you go? What'd you do?
No, I don't know. My thing seems to be playing up or something.
StreamYard and those gremlins. StreamYard and those gremlins.
Yeah, I don't know what's going on. I can't see anyone else in the band down the bottom. I can't seem to add my chart or anything. It's like I have no permissions or something. I don't know what's going on.
Ew. Hang on. All right, Jonatan, if you're in the background, mate, give LJ a proper link. I sent him the invite one from the studio, but maybe there's a better one. And we'll see what we can do. How's everyone doing? How is everybody doing? LJ left because he doesn't want to see me dancing. Thank you very much, Fabian. That's really, really kind of you. Thank you, mate. So yeah. Anyway, StreamYard's been a bit weird lately. So if you want to try and log out and log in again with your account on StreamYard, and then you should see the studios in there. And I'll hold the fort. I'm not going to dance, just so everyone knows, but I will hold the fort. Sam, no need to spam spam the chat, because otherwise we're just gonna time you out. So yeah, give it, just chill. We've only just started. We'll come back to you. Who else we got? We got Pippopotamus. I'm still waiting for your offer. Those of you who don't know, pippopotamus.com. I am now the proud owner of that domain. I was inspired by Pippo's handle, and I was surprised to see that he wasn't interested in buying the domain. But maybe now that I bought it, maybe that supply and demand is going to kick in, and he wants to make me an offer that I just can't refuse for that domain. I have got other ones as well, if you're interested as well. What else we got? We got Venetius in with us. We've got Louis in with us. We've got Nora in with us. Fabian, yeah, we love it too, my friend. We love it too. Venetius, what did you do? Dirk, I'm a Barbie Mike. Doesn't quite have the same ring to it, although my daughter does love a good Barbie doll. So what can you do? Anyway, what we got happening? There will be absolutely no dancing of poles, Manish, whatsoever. I'm in Poland. That is the only pole that we need to worry about. Right, there is the pole that you require, and it has been known that I do have some magic in me, but it's not that kind of magic, Nelson. It's a whole different kind of magic. So yeah. Anyway, guys, let me know what are you trading today, whilst we wait for LJ to figure out his StreamYard gremlins. Jonatan alluded to it earlier, that we're making some changes to the Fiverr stream. They've realized how good the ABL stream is, and so Jonatan decided, all right, Mike, okay, you work your magic and give the Fiverr stream some ABL pizzazz. So yeah, keep watching, keep subscribing, keep liking, and you guys will find out more. But for now, it looks as though we have got the forex.com feed working on TradingView again. It wasn't working this morning, so I can actually see what the markets are doing, specifically with gold. Gold earlier on, in fact, if I go back on my chart, there we go. Gold had earlier created this inside bar in here, but what it's done is it's actually created more of them. So we have this one here, is now taken the lows on that one, but it's created more of them. So it's just creating a big old trail of major liquidity either side of things. And why has my mouse stopped working? Well, that's inconvenient, isn't it? All right, Jonatan, if you're there. Jonatan, if you're there, mate, I'm sorry to do this to you, but oh, there we go. Never mind. All right, mouse is back. All right, Monday Gremlins. Always a pleasure. So yeah, we've got some nice liquidity levels on either side of things here. So price is leaving a trail down here. I was anticipating us to come up here, retest these highs before we started seeing sells, but basically we came as high as this and then wicked straight back down. We look at it on the lower time frame, we can see it just here. Price came up, it retested this level here, as you can see it just there, and what it did was it left this, what I deem as major liquidity, and from there went down. So looks like sellers are coming in. How long that level gets left for, we will see, but as you can see, we're leaving. What is wrong with my mouse today? Yeah, Jonatan, apologies, my friend, but ABL technology, it seems we've been jinxed because everything has stopped working. So if you are there in the background, and you can jump in, that would be much appreciated, because I probably need to change the battery on my mouse because it seems the battery doesn't want to work. And LJ's vanished for some reason. StreamYard has completely destroyed him. So if you're there, jump in, please, mate. Or Dirk, if you can come back, please, Dirk. Let's see if I can click on the links. Is LJ coming or is it all Mike? Well, LJ is on his way, but he's having problems for some reason. All right, Jonatan, LJ in his account has nothing. He's got no streams, no nothing. It's like he's been removed. So if you could have a look, please, mate, that would be most appreciated. In the meantime, gold is selling off quite nicely and coming for this level that it's left behind. Could be a nice little area, this pocket that we're sitting in at the moment. Let's see. What have we got in this area? So this was previously an area where we stalled and then we sold off a bit more. Let's have a look. What was it in this zone that I particularly liked? Anything in particular? Maybe the 5 minute? Let's have a look. Yeah, it was a nice, big, fat 5 minute engulfing. Okay, Jonathan, I need you to come back, mate, because my mouse just keeps crashing. So I'm going to have to try and figure this out. And I've got no LJ, and things are going a bit Pete Tong. But if you're not gonna rescue me, then I'll just carry on, and you guys can just watch me try and figure out my mouse. Let's see if this works. All right, there we go. All right, let's see. Hopefully, changing battery fixes things. LJ is back. LJ.
Thank you. Yeah, I can't add myself. I don't know what's happening. I see the
other going
image.
on today?
It's dying. Like it wouldn't even load before.
What is going on? Anyway, yeah, gold's selling off. Those of you who weren't sure, I did say gold would sell. LJ said gold would sell. We both said gold would sell.
Yeah, we did. Yeah, gold sells.
ABL. We just know. You know, we're just in the we're in the know, guys.
Yeah, we've got this channel here on gold at the minute that I've been looking at. If you can add my thing.
This is going to be such a bad stream.
But yeah, I jumped in short on gold just up here earlier when I sort of failed at the top of the channel again. Now ran right down to the bottom. You know, we're basically oscillating that underside of the base from the fall we had from NFP, and now I'd be looking for a continued move down through 32.95 and then towards 32.80, somewhere around there. So I'm seeing on gold at the minute. So, but yeah, no, this is going to be a pain.
My mouse keeps dying. Hang on.
Oh, really? No, everything's breaking all at once.
Madness. All right, so okay, for some reason, okay, you are no longer a member of the team. It seems.
Been removed.
You've been removed as an admin, so hence why you're now simply a guest. Which I don't know why. But anyway, yeah, gold's pushing down nicely. Looks like those sells are going to come in very, very nicely indeed. We were talking about it being a technical week this week for the most part, because we haven't really got much news happening this week. There's no real major catalysts unless the orange man in the White House decides to start tweeting something. But even then, it feels as though the market doesn't really care anymore, right?
Yeah, there could be some sort of headlines around some of the tariff stuff. Like we had the July 9 date, you know, for some of that, which is coming up 2 days from now. But there seems to have been a little bit of front running of that through various comments over the past couple of days already. So I would say the market's pretty prepared, pretty expecting this, to be honest, as well. I think we're very much in that pocket of people realizing that, yes, all these deals are going to take way, way longer than they would like it to, or just, you know, they're just difficult to do. It's not easy to wrangle all this together. There's a lot of moving parts. In it makes it seem very simple when they're just, you know, slapping just 10% on this and this much on that and whatever. But there's, far more complex components all throughout all this stuff. So, if, you know, you could have some sort of adverse headline as far as Trump, you know, threatening to up the tariffs further again. I will say Scott Bessent did echo that last week as well. He did say we're willing to return to the higher levels for the tariffs if, you know, if we're forced to, if we need to. So I would just keep an eye out for that. That would be something that, you know, in theory could make gold shift around. And you see and that sort of stuff come off.
Sorry, Make, I don't know what you're asking. We're literally talking about gold. Like, look at the screen. We're literally talking about it.
Maybe he's confused why we're running off. But
yeah, I don't know. CFDs on gold. So yes. Or are you shocked that we're talking about gold? Because this is what everyone wants to talk about. Dirk is saying stop loss adjusted to break even on that gold short, FYI for everybody who was already with us during the morning session. So Dirk was selling gold as well. There you go. All right. I thought for some reason I thought Jonatan was buying gold. Which seemed very, very strange if he was.
I think that was for the community account, right?
Okay.
I believe. Yeah.
Guys, you trying to get him to blow the account?
And that sort of thing.
The guys are trying to get him to blow it. That's what they're doing. It's just that's pure evil, guys. It does look like we've just come down to the low of Tuesday. And it's a question whether we want to break that Tuesday low, which I think you've got marked out on your chart as well.
Yeah, right here. And then it's also at the bottom of the channel, of course. So natural pause point.
Exactly.
That kind of thing. And then it's going to be the question of can we run that on lower from there. Yeah,
it does look as though it will go lower. Just looking at it, you know, as I say, there is just a long old trail of major liquidity further below. But as somebody said in the chat, it has reached its ATR for the day. So it may be that the move for today has already happened, and we're now just going to slowly ebb and flow a little bit for the rest of the day. Again, we've got no real news, so there's nothing really around to move it significantly, right?
Yeah, because we had this larger trading cluster kind of zone that last week the price action was pretty rubbish overall. But then, you know, we failed to really make any ground, gradually came off further. We had the NFP trade there. And then today here, that was through Friday, where we just, you know, sideways doing nothing, obviously July 4th. We've had this slight sort of wick created with a marginal lower high and then just come right off. So we're now testing, coming outside of that range. This was the prior box that we had through the run up as the sort of place for price to beat. You've got these areas of, you know, buying pressure and change of structure, like selling pressure coming through here as well. So you've got a clear sort of band through here, and that's what we were tossing with, oscillating around that level, as well as the NFP low earlier. So yeah, my next point of interest would be down here around that 3280, and then eventually down to 3250, and then see how we go from there. So
yeah,
but yeah, like you're saying, we are at the ATR today, so we could like chop about in here, and just like this channel just extends down here, and it's kind of just back and forth. So
absolutely. Stephen, for the ATR, there's a bunch of indicators out there that can do it for you. ATR is somewhat your own preference, because you can do an ATR based on a range, right? So you could do an ATR based on the last 20 days, the last 100 days, the last 200 days, whatever you want, right?
So as well, you know.
Sorry.
Although and all the way down to like the previous session. So like where did, you know, London trade, where did Asia trade, that kind of stuff. So it depends. But I guess generally when you say ATR, people are looking at like a typical daily range, I suppose. But the average is normally a 20-day, if I'm not mistaken. Something around that.
is what they do. Omesh 1 hour is asking, what about Euro USD? Whilst I potentially have to sneeze.
So euro dollar, we're talking about in ABL. A move further down into this lower band here, right by the NFP lows as well. We've got that now. This 117.20 is kind of that mix point. That was also an old level going back where we sort of oscillated as like a midpoint. So from here, I've taken a long just here at about 24, looking for a move back up here just on the other side of 117.50 potentially. Then a bit of a pullback into this head level here, somewhere between there and 35, 36, and then to look back towards the higher 117s. We got part with that as well. We got the corresponding move up here. Also spoke about in ABL for the dollar index to come retest this kind of high here, either create a marginally lower high or just, you know, basically phase out at there's this descending wedge that we've held longer term. So you've got that intersecting with the other cluster highs here, and then looking for us to pull back and sort of continue lower down through that range. So I think similarly, dollar yen, this is what we had mapped out last Friday on the Discord as well. And so looking for a pause area somewhere in here in this higher 145s, and then ultimately to return to the moves lower in the dollar yen. But yeah, overall, very technical week. Nothing major on the news cycle as far as the US side of things. I'd say probably the biggest, obviously, is going to be the RBA this week. So Reserve Bank of Australia. Then we also do have New Zealand too. The thing with those as well, the expectations kind of probably a bit priced in to a large degree. So, but you know, there'll be a little bit of activity there around the Aussie dollar, which might be fruitful. Otherwise, I think, yeah, very technical week with the piece to watch is just around Trump after, you know, we're coming to some of these trade talk so-called deadlines, which get moved constantly. So, you know, bit of headline risk there to look out for, but yeah.
Is that our way of continuing the topic of the chicken that Dirk and Jonatan were talking about earlier? Did you? I don't know if you saw that earlier.
No, what's this chicken thing?
I can't quite understand or remember, but Dirk and Jonatan were talking about chickens for some reason, and I can't remember why. Something about can a chicken trade an account for you? You know how like there's people that do like these sweepstakes and like and all this sort of stuff. So can a chicken trade for you? And then Jonatan was going on but the chicken you have to own the chicken, and then chicken has to pass KYC, and
right.
I don't know. And then if the chicken doesn't trade, then you eat the chicken, and then
otherwise he just goes to KFC. If not,
yeah, exactly. So just,
pass KYC is off to KFC.
It's just So it was all a bit. It's all a bit weird, but yeah. So, but of course there was the teasing of Trump's chicken tactics of, I don't know, playing chicken with the deadlines and whatnot that he didn't particularly like. A few months ago, I think there was, you know, where I think it was with China that he tried to strong arm them and trying to just like and so he then backed down. So yeah, I do think you're right. I think these arbitrary deadlines, they're not really that that significant, you know.
Yeah, and the China portion is very hard as well, because obviously, China, one of the big leverage points that they have is how much US debt they hold, right? Mm-hmm. And the US still needs that support to fund everything going on. US obviously has the options to start putting that on some of the back of, you know, the banks, insurance companies, whatever. They can just mandate that, and then they'll still get that fill they need. The other thing with China as well is they actually have a large, not debt problem, because their economy is very different and managed differently, but a lot more debt than people realize. Arguably 3x the US. So the reported debt to GDP is like 84-ish%, with the US about heading towards 120 or so, getting on now. However, if you sort of calculate it properly, you also have to question their own numbers. And so if you just take a bit of deviation, it's more like 160%. And then also they have all the sort of state-backed enterprise, which is all the private companies that the government basically has their foot in with, a stake in, and then they get them to borrow personally, right? So that the government doesn't have to. And then technically they're one thing. They're a mixed entity, right? So if you add all of that up, it actually goes close to like 300%. So this is where they're both kind of in this semi-stalemate. Like both of them need each other so badly to go forward, that it's hard. No one can really, at the end of the day, strong arm each other. So a lot of it's more rhetoric. Yeah, exactly. Yeah.
So then do you think, I mean, some would argue that Trump should know this and, that it's not going to be a quick win. Do you think this is just posturing, political posturing, just to try and gain political points?
A little bit. And I think it is sort of the thing is America doesn't necessarily need to, we've got this debate over the next 20 or so years. Who's going to come out as the big player, the big dog? Whether it's going to be China, do they take over the US or whatnot, right? We're in the new era. No more chicken.
He wants a golden retriever.
Nice. But yeah, so there's that big debate there. So it's in part a push to keep the US at the top. They don't need to obliterate China. They don't want to, obviously, because they need China at the same time. But they just need to sneak over first place, right? And then that keeps everything on lock for them. And so China having those problems, they've very particularly as well got a massive demographic cliff that they're going to come off. And so that's why China is also pressing so hard right now to get ahead of that. Otherwise, they're going to be, just knocked for the next decades and decades.
They're going to have
so I think it's a bit of a game theory brinkmanship like that for a couple of the chess moves down the road, kind of thing. So,
what's your thoughts then in terms of what people should be looking at for today? Coming into New York, obviously we had the long weekend. We had NFP on Thursday. Certainly did move things to some extent, but then obviously Independence Day on Friday, the bill was signed, the big beautiful bill. Do you think anyone is likely to see much movement, given the fact that we've seen ATR get hit on gold, we've seen ATR hit on Euro USD as well? If that's the case, then is New York going to be a bit of a damp squid? Are we just going to see a bit of a pullback into kind of opening levels of the week?
Yeah, probably. So, I mean, where we were looking at, sort of say if we go over to Euro, that kind of 118 area is looking a bit rich for the Euro right now. It's probably relatively, fair price, but maybe more mid 117.50s. Otherwise, you're now having to argue towards 119. So I think we sort of fully priced a number of things in, and perhaps, just a touch too much. And that was just due to where we were positioned structurally as far as like technicals, that kind of stuff. So we had a bit of a run. So fair reason for us to pull back. I mean, that's something we highlighted here on dollar index for some kind of movement like this. And we've basically seen that play out just like that, down, up, down, up, down, up, and now into that edge. So I think coming down towards low 117s, you're looking at better reload points for continued moves higher on the Euro. So I think, again, this is very much just a technical kind of play. We sort of fully digested most of the news, whether it's all the headline stuff, tariffs, blah blah blah. Everyone's gotten over that, and then we've had a number of the economic pieces come through. We've had the Fed echoing, moving slightly towards reducing rates. We had NFP, and then we also still at the moment had 4th of July, people go away on holiday. We're also in European summer, so in general, there's less hands on keyboards at banks and things right now across the board. So you do start to get more of that just technical movement through this period. So as far as today, I would be looking for just as I jumped in here, a slight retracement on the ATR, if you consider that. Depending how far we get, that'll be the question. But that's probably the move for today, I would say. So yeah, I'm in on euro. I don't like the pound as much.
No.
Like you can pick up a great number of points, but the pound at the moment is very susceptible to being just washed out, getting hit.
The pound for some reason is very jittery the last week or so. The finance minister is crying supposedly in Parliament, and suddenly everyone's selling off the pound, and I'm like, really? Like, you guys that kind of jittery about the pound? I mean, okay, fair enough, but if you look at the, I understand the reasons why there was maybe nervousness around it, because this is the first chancellor in a long time. Chancellor of the Exchequer, so finance minister in the UK, who's actually put self-imposed rules of saying, look, we're not going to borrow to pay our daily bills, and so on and so on. So in actual fact, trying to implement and create a sustained model and being physically responsible, right? But it just seems a little bit of an extreme reaction to say, well, she was crying in Parliament, so she must get fired, and so therefore the whole of the UK economy is just going to collapse. Just seems a bit of an overreaction, doesn't it?
Yeah, definitely a bit of overreaction. I think it comes into part of just what we were saying about before, how you have European summer, a lot of the more, especially within the bond market, right? That's very, it's pretty much just professional traders, really, right? Very few outsiders trade bonds. It's pretty rare. So if you get, like I was saying, less hands on keyboards, you've got less liquidity to pick up the bottom end as well. So hence that feeling it, you hit certain levels and price sort of just runs. I definitely think it was a bit of an overreaction. It's nothing like the Liz Truss period that we had. It might just echo some of those continuing concerns that are basically still lingering, but yeah, definitely probably a bit over the top for what we had.
Wasn't it?
Yeah. So, but with that, hence, I wouldn't be surprised if we could get some other kind of event pop off like that, and then you just see, pound is looking pretty vulnerable right now. You could easily see us drive lower. So, as far as a structural standpoint, if you're trying to take that view on dollar turning back lower, euro definitely seems to have the better structure at the moment to sort of hold up.
And
inflation's in check.
Just want to pull up, because we were looking at talking about pound, we were looking at GJ this morning for potential longs, and we were looking at it around about here in this kind of price point at the moment. We were kind of thinking, right, okay, we're going to see a push up. We didn't actually see it. Just as we finished stream, it then just pulled away and pulled back. But I mean, as a potential trade of a break and a retest, that would have been an absolute gem. It hasn't quite reached that 50% level, but I do think it's coming up here without too much of a struggle. But that 50% level, almost to the actual point, went all the way. So looking very, very good. The only thing is whether then the pound is then going to sell off once it reaches this prior area. The prior area, the reason for that is, if we go back, we can see it here. So it would have been probably on the 5 hour, was it? Let's see. What was I seeing? Obviously seeing something on this level. Must have been on a different time frame. This is why I'm terrible at live trading, because I don't use my color coding charts as I should do. But there was obviously something happening at this level, which is why I've marked it out. So I need to get better at using the color code scheme that I actually have. But yeah, that's the area. I can't see why I've marked it out, so I'm going to delete that, and I'll need to go back and see if I can find a different one. But yeah,
we did get that perfect tap into 50% of that fib, like Russell was saying. So yeah, well done, very good. I wasn't sure if we'd quite make it there, or pause earlier and then keep going, but yeah, we got that run off.
No, it was a great trade opportunity actually. So yeah, if you're wondering what we're talking about, go and check out our YouTube channel, the AlphaBeta Lab. You can find us on YouTube. You can find, I think, the links in the description as well, and you can also come and join our community. It is a educational community for traders by traders, and it's completely for free. You don't pay a single penny for it. We've got loads of courses, strategies, and like-minded traders all in there. So make sure you come and check us out if you're not familiar with us already. But yeah, it feels as though it's stalled somewhat. I would like to see us actually probably just leave this inside bar here and start going for this area up here to push on higher. If we look at how it's structured on the 5 minute, it's struggled to keep this high, or this low, sorry, and it's actually starting to try and create a structure to push down. So yeah, I mean, theoretically it's another break and retest. So you could argue that you want to look for further longs, but I guess we may have run out of steam for today for anything further. So that might be our range. We've got to remember that today, there's literally no news whatsoever, right? We had retail sales for the euro a few hours ago. Nothing else happening, right? Nothing else to write home about. In fact, as far as forex factory is concerned, there is literally no red folder news today, not a sausage. So the only other thing to maybe consider is looking at the strength meter and understanding which pairs are maybe worth looking at. So on Friday, we saw the Aussie and the New Zealand dollar and the CAD looking rather weak. The yen, the euro, and the CHF showing strength, whilst the pound and the USD pretty much did nothing. Now, that's to be expected given the fact that we didn't have any US traders, so New York session didn't happen. But if we then take a look at today's trading, we still have weakness in the Aussie and the New Zealand, but we now have significant strength coming into the US dollar. So ordinarily, I would have said, have a look at what happened on Friday and say, let's take a look at, for example, Aussie yen or Euro Aussie maybe, or something like that. Not sure if we're going to see much. But the fact that the Aussie is showing weakness again today suggests that there might be some opportunities. I know you were looking at Aussie USD when you were LJ for potential trades.
Yeah.
On the 5 minute, we've obviously seen quite a sell-off, as you can see there, pretty much throughout. So are we maybe now at the point where we start to see that strength in the dollar just come off a bit and maybe see some intraday opportunities on Aussie USD?
Yeah, that's kind of what I'm seeing at the minute. We had we got the longer term channel we've been in for a number of weeks now. I think 2 months or so. And then recently a channel that formed over the past week or so. And we came a touch under that today, then retested the top side and then just collapsed all the way to the bottom of the longer term channel, which is also just around one of the swing lows as well that we had near 64.85. So we've got a sort of a double, triple cluster of support in that area. So yeah, definitely looking for a bit of a retrace here. Similar story to the euro dollar trade, a bit of a move back higher, somewhere around, you got your first stop point about 65.12 or so, and then beyond there 65.30. So it'll just be a slight retrace of the move we've had today, seeing as across the board we're kind of pressing the ATR in general. So again, very much just a technical type trade, bit of a retracement after extension of price falling on a no news type day. So
I mean, it looks all right at the moment for buys, if I'm honest. I quite like the structure that we've got on the 15-minute. We've had these two kind of pull down, push on up. I haven't done a wider analysis on the zones, so my zones are probably out of date. But again, we've got another 4 minutes left on this 15-minute candle, but I do like the way that we've formed this structure here with an engulfing to the upside. So testing this wick rejection here and pushing on higher. If we go down to the 5-minute, it looks even better, where we've got a wick rejection here. We've got this nice engulfing candle pushing us to the upside. So, I mean, the riskier trade would be going to stop just below there and assuming that this now is our breakout area. The only thing is that we've got this bigger move, and it's the question of whether we can actually break this move completely, right? That's going to be my concern, is that if you look at that as a move, we're actually just coming to the 50% right now. So, are we going to see that strength in the dollar, this one here? Are we just going to see that continue into New York, or are we going to start to see a pullback? So that's where it's a bit of a tricky one,
I had sport laid out at 86, and basically entered long at 88, with the first that T1 just by that top that you outlined there. So that's sort of 14.15. That'll be a first point of interest for take profit, determine if you've just full stalled out there or potentially take half, and then the top side be 65.30. That would kind of be what I'm looking at right now. That is roughly, what was it? Just below the 61% retracement point from the high today. So that comes in at 65.34. So I'd be looking for TP just under there.
Yeah, so I mean, those let's say theoretically, those are the kind of the two potential trade ideas, right? You could say that this move here is a break of this previous structure, and so therefore we're coming back to the 50% and then looking for us to come down to 64.72. But I don't feel like that is a realistic target given where we are in the day and given where we've come from, right? We've started the day all the way up here. It just feels it feels a bit far-fetched, Sorry?
You reckon? I reckon we got the upside. Same. Like if you look at
no, but I'm saying I think it's too far fetched for us to sell further, given how much we've already done.
Further. Definitely no way.
That's what I'm saying.
No shot.
I think selling further just feels it feels far too overstretched. But if you were looking at the ideas around it, well then you've got this big wider move. You've then got this kind of consolidation here, and then a further break. But is this just a fake out, right? That's the thing. Is this just faking down to try and get more people to get into sells? Potentially. But the idea would be... Come.
I was just going to say, overall, I'd be looking for, a retrace from here. We come test some of those higher levels. I believe the 20-day moving average, and it's roughly the pivot on a daily timescale, is about that 65.20 kind of area. Just below it's like 65.18, so that's roughly where that head is as well from near term. So that would be your first point to test. You got the 10-day moving average at 65.44. So I'd be looking for further move up somewhere close to that 44. still out there, and heading into RBA, I'd probably have a slight lean on sells, but as like a buy the rumor, sell the fact type thing. So in this case, that means sell the rumor and then buy after, right? So we're looking for markets come off from there, and then potentially get some kind of a bit of a double bottom, and then reload from that point.
Yeah. Just pulled up those your favored SMAs. Certainly on the on the 200, on the 5 minute, we've got a long way to go. And you can see that's where we've kind of broken away, and now we're coming back together again. And so again, it's reasonable for us to see a pullback given where we are in the day. Seems reasonable. And Mo, this isn't signals. This is just trade ideas, and this isn't a signal service. This is just us looking at what's available in the markets. If you want us to have a look at a particular asset, let us know. We'll pull one up. But this is just us kind of taking a look at what's happening on what is generally not a particularly busy market today, I would say. So just trying to see what might be worth trading, basically. The other one may be looking at is New Zealand USD, but I don't know. I've never been a fan of that one, because I don't feel it's got the legs in it to really go anywhere. So
I mean, Aussie dollar and New Zealand dollar move pretty in sync, but like Aussie dollar is like way more liquid, obviously, than New Zealand dollar. Particularly if you want to take like swing trades. Like the spreads pull out massively on New Zealand dollar compared. Aussie dollar does get some high spreads then as well at times, but New Zealand dollar just smaller economy, it's just how it is.
Yeah, exactly. The other one, just curious to have a look at. I'm just taking a quick look at Aussie yen. Obviously, we had a massive pullback after this break up higher. Does feel like there's more longs in this for Aussie yen. I don't know what you think, but it really does feel like we've broken out, we've come back down, and we now look for another push up higher. You feel the same way?
Yeah, I agree. I think all the other yen crosses, so excluding the dollar yen, definitely still have that upside tilt, and that in part goes to the forward rate trajectory per central banks. So obviously the US has a lot more to cut at the minute. You've got the difficulties with bond market and stuff going on. At the moment it's stabilized, but people still have an eye to that, and so that carry trade in the dollar yen in particular has been very heavy for quite some time. Whereas the other majors, compared with the yen, all of the central banks have moved far closer to their neutral rate, or at least, say someone like the Reserve Bank of Australia, they're partway through. The ECB is, basically one cut from that. So hence on a forward differential type term, looking to the future, that means euro yen up. We've kind of played out the rate reduction at this point, and Japan can't go anywhere with rates still. They keep wanting to, but good luck. It's been the story for 2 decades. So
yeah, Raf knows exactly what the kind of trading I'm looking for. So yeah, Pippopotamus is watching the stream from the gym, working out.
Nice.
Glad to hear it.
Love to see it,
And Guitar Tech, if 80% of the people here believes that we are giving signals, then 80% of the people here are going to be disappointed, because this isn't a signal service.
You can take inspiration, but it's not. Yeah, it's not a. It's not a call for execution.
You should be doing your own analysis and using your own edge to decide what trades you want to take. You shouldn't be blindly following somebody else on YouTube, even us. So yeah. highlights by K2 is asking us to have a look at gold again. So heading back to gold, gold is already down 1% on the day. So that's why, again, it's just another one of those where it just feels like, okay, it's sold off quite a bit. It's done a significant move already today. So if we look at it on the 1 hour, we've basically started here, right? And we've come down to this level here now. Where have we come to? We haven't really come to anything of great. Well, no, we've come to the low, Tuesday's low, and we've kind of bounced off that. So there is maybe a bit of a pause now as a natural kind of area for us to think about bouncing away from. As you can see there, we've not gone past that low, so that might be just where we take a bit of a breather for the day, and then pull back up to retest some of these areas. But again, we've got to wait and see what happens with New York when New York opens. Currently on the lower time frames, if I was looking at the 15 minutes,
give me 1/2 second.
Yeah, go for it. Ooh. There we go, that's a bit better. Question was, are we breaking 3295 or going to 3340? I'm not sure if we'll go all the way to 3340, because if we were to go to 3340, we're talking about coming all the way back up to here. And if we look on the daily, that suggests a very, very different daily candle. So if you're asking about today, I don't think we're going to 3340 today. Just looking at it. Now, there is this inside bar here on the daily. So that will be seen as major liquidity, but I think we've just got further room to go down. So I don't think we're going to see anything coming up to 34.40. I think we're still bearish, is my personal opinion. So if I'm looking at that as kind of an expectation, where do I think we'll probably go? I think we'll probably see something like this coming in to retest this area and then sell off. But that is over the course of today and into tomorrow and so on. If we look at the weekly, we did break lower here, but I still think we've got these key levels further down for us to break past. So I think this is just a false kind of support that people would be expecting on the weekly. Because if we look on the monthly you can see that we had these. Let me just get rid of my drawings. You can see that we had this wick rejection from June, and we're already pulling down from July, having already been open for, let's say, 3 or 4 days. So that's kind of where I think we're heading. I don't think this support that we're seeing from last week is necessarily anything of significant strength. If we look at it on the 11-day, you can see here we've got this inside bar here. The same on the 22-day, we're pushing lower. So that's why I think we're starting to see sales coming in. So yeah. Just catching up on chat. Manish is asking if we can have a look at the NAS. So the NAS we were looking at earlier on the ABL stream. The NAS, oh, he's back. He's just, hang on. I forget that he can't do this by himself.
Yeah, I can't add myself, sorry.
Sorry, mate. Good thing you told me, otherwise I wouldn't have.
No, I was trying to point, but.
So the NAS, I think, again, we've seen this big impulsive move from the NAS. Actually is not, I mean, we've got to wait for New York really to open on the NAS. So NAS overall, as LJ was saying, very much in a bullish move. As you can see here, we've broken this structure. So looking to go higher. I wouldn't be trying to sell it, because I think anyone trying to sell it is just going to be disappointed. It does generally feel like there is momentum to go a fair bit higher. If we consider this as a break of this area, then let's say, for example, this is our structure that we're talking about. In fact, I've already drawn that one. There you go. I've already drawn this move down. If we're then going to look for what area is it likely to target, well, we're looking at the 23,770, something like that, as a possible area before you would start looking for sells, just as a natural kind of turning point, right? Because we're talking about all-time highs. So that's where, you know, all the people that have lost tons of money on Bitcoin, they try to sell all-time highs, right? There's a reason why they lost their money, because they weren't necessarily looking at anything of great significance. So gotta keep an eye on that.
I took a long on the NAS earlier, just after ABL, when because we pulled back towards that sort of trend line area that we were talking about after gapping up this morning. So yeah, I'm looking for, you know, close to that spike high from earlier, about 22,800, and then the highs from before 22,900 at the moment. But yeah, I wouldn't be jumping in front of the momentum of the indices right now at all. I think it's very much a buy on dips. That's great, but trying to like pick tops, because now we're in like that open air pocket. It's just whatever volume is going through the market that day. You know, random headline around Nvidia or something, you know, it's going to pull things back, etc. So there's definitely a firm bid under the market, however.
Yeah, absolutely. Mo Trading saying gold is taking a pullback and will shoot to long till 33.40 exactly. Our analysis are so opposite. Interesting. Good luck. Good luck to you as well, Mo. If you are so certain about these things, then make sure you email Jonatan at the trading room email address. Let me put it up on the screen for you right now. If you want to be here featured live, come on in. Show everyone your setup and talk us through your strategy, and we will be happy to have you, or Jonathan will be happy to have you as part of the stream here for the Fivers. So yeah, make sure you send an email and he'll come back to you. Tiago, good to see you, Tiago. Hope you are well, my friend. Yeah, 33.40 is just, it is. I mean, as I said, look at it from a perspective of where is 33.40. 33.40 is essentially where we opened, right? Pretty much. Okay, 33.40 takes us to the high of today. So if we're saying that on the daily candle, right? Let me get rid of all these drawings. Are we then saying that this candle here today is going to suddenly close higher and turn bullish? Is that what we're saying? Because if it does, then that means we are incredibly bullish and something catastrophic has happened in the world geopolitically to suggest that gold is going to new all-time highs. That's my view. I don't know what you think, LJ, but if you look at it, you know, if we're saying that we're going to go to 33.40, that just doesn't, I don't see that happening.
Yeah, I don't see that happening on gold at all. We like, even through today, like, look at the price action. We've just got a persistent willingness to sell through here. All through the Iran period, we had every reason for gold to rip. Yeah, and it hasn't.
And it didn't. Exactly.
So when the market has every reason to move on something and doesn't, it tells you that kind of stuff is very much priced in. You know, again, it's one of those buy the rumor, sell the fact type things. It's the same way you can have something with a central bank or inflation or ISMs or, you know, whatever it is, and you've actually got that bullish signal, say, call it the US dollar right now, and it should run. We get like a small bump of like 10, 15 points. It just can't really go. Then you tend to see the market just collapse the other way. So that's when stuff is sort of priced in. I think people have, you know, looked at things and gone, okay, the chaos seems to have subsided. Cooler heads are prevailing, even with all the sort of war stuff going on. You know, it's still active, but in a more measured manner. And then a lot of the other parts, like gold is pumped mainly from like real buying of physical gold, not just trading like speculative kind of manner. And you can go look at all the flow, the fund data and all that kind of stuff to find that. And so where we are now, I wouldn't be surprised, like you've got Russia absolutely struggling. So my suspicion would be that they are very much selling a whole heap of gold. And that's the same we had through the up coming towards 2K, you were seeing gold up and up and up, but
because Russia was buying it.
It wasn't from institutional buying, whether it's through futures or spot or whatever, on like the paper gold market. It was from the actual physical gold. So they're at that pinch point now. You've seen gold come; it's outperformed the indices now. As far as the past 3 decades after this big pump. So if you're holding on gold stores and you need to buffer that capital base, no brainer to start selling here. And then obviously then institutions are going to be looking at it as well. We've ripped, egregiously. You've got stocks moving heavily. So you shift slightly out of the safe assets because now you've got a more risk on environment, which means gold in general is off. Right. So it makes complete sense. If you've got stocks hitting all-time highs, would you expect gold to keep going? Probably not. So unless you've got some, if that they are going in sync like that, you've really got some kind of, some underlying demons in the economy that people are looking for that are going to pop out and ruin the show. But right now, you can't see that right now. We've got Trump's bill, which is a massive like steroid shot to the arm, big adrenaline shot that's going to pump things further. And so that's what everyone's looking now to, whether we eventually end up in an economic crisis because of this, that's very much seems to be the expectation going out, say the next 4 years or something. But for now, everyone wants to get on that train. Everyone's learnt the game. When anything's bad, central banks will jump in. And whenever you get these, pump sessions, call them, just like we've had prior to every other crisis, selling too early is a really bad idea because you get another 25, 30%, and you've just cocked yourself out. And then it's really hard to make money after that because when it does crash, then, you're out the game to some degree as well. So, that's why everyone would rather just play it for now, see where we go. As long as Trump's in, he's going to very much have that lean that say if stuff did something off, he'll do some crazy thing to say like, oh, hey guys, we've announced this thing and we're stimulating and rah, and it just gives that lift. So everyone's very much on that pitch right now.
Almost the opposite of what you would normally say, where it'd be a short-term gain for long-term pain. Yeah, absolutely. Mode trading, the link has been on, the email has been on the screen for the last 5 minutes. So hopefully you've caught that. If you haven't, then it should be in the description as well. So yeah. Having a look at the Dow, Algo Drills is asking, can we have a look at the Dow? So let's have a look at the Dow, and then we're going to go to Pound CAD because I saw there was a request for Pound CAD as well from Tiago. So Dow, we're in this kind of structure here where we're just waiting. We had national holiday in the US on Friday, so really I wouldn't be making any calls on any of the US indices until New York has opened. Personally, I'd be wanting to wait and see what their reaction is going to be to the bill and everything else. I don't think there's going to be suddenly a massive spike of any kind or any kind of massive volatility coming in. But only when the market opens in the US are we going to really see the sentiment truly come in. Because,
in general, it seems positive because we did get that, like we gapped up this morning for Monday's stuff, which again, as well, also comes to one of those things where the market as well mainly wants clarity. Like often, even if something is like not ideal situation, as long as they have clarity, certainty around, business, then things will keep going. Right. Yeah. So also I can't click the comments, which sucks as well.
Oh.
But Rick Grimes, mate, like I said the other day, love your name. But yeah, if you're holding half a lot short from 33.40 on gold, good stuff.
I'm trying to see where it is in the chat, but I can't see it. But it's
only a touch up. It's just like,
there it is. Yeah, sorry. Yeah.
Yeah.
Very, very nice, Rick. Very, very nice indeed. And Void is saying Lance Stroll was third in the Formula One race yesterday, so that's a catastrophic in my opinion.
He didn't end up there, but he was third for a long time. Like I was kind of like, dude, there's no way Stroll gets a podium. This is ridiculous. You know?
I mean, it was a bit of a wild race, I've got to admit.
Oh god,
it
was fun. It was a good one to watch. Yeah,
it was a very good one to watch with the weather proving rather impactful as well, which is always nice to see in the UK. So yeah. Danny's saying I have a contract. Oh no, actually no. Sorry, Danny, I'm going to come back to you because I promised pound CAD. It's pound CAD. I mean, pound CAD. If you look at it on the 4 hour, you could argue that it looks long, right? If you took at this structure here, that one there, you could argue that there's a long position in terms of a break of this wider structure here and breaking out and then going higher. But as LJ said earlier, the challenge with the pound at the moment, that it's very, very what's the word? It's very sensitive, more so than you would expect it to be.
I was going to say though, I did just take a pound dollar trade just earlier because
long.
Yeah, long. Because I was just looking at the so bond differential. Seeing as there's no real news, very technical day. You got the US 10-year down 0.16. We've got the Bund, so that's Europe, down 0.17. Gilts today are actually plus 0.001.
Okay.
So as far as the rate differential aspect, pound technically is actually doing a bit better today. And I mean, you can see that here in pound dollars continuing to rise, and then euro dollars lagging at the minute. We're just on the floor.
Yeah. Yeah, certainly. Looking at it from a higher time frame on the 4 hour, that move there, obviously the lows to the high again, similar breaking structure, much like the pound CAD. In fact, this one probably looks a little bit cleaner than the pound CAD, if I'm honest. Pound CAD, although actually pound CAD did come down low, so it came to the 61.80, whereas pound dollar is just down to the 50%. I'm not sure how far you'd want to go. That's the only thing,
Yeah, pound dollar, my target's only at 23, so it comes into sort of where those sort of highs, relative swing highs, I guess we had on like a short time frame, like 5 minute from earlier in the day.
Yeah.
And that's also roughly where the 200 moving average on the 5 minute links up.
Basically just up to this kind of level here.
Yeah, literally right there. Yeah.
So
yeah, it's just a short little pickup for today.
I mean, as a long position, this setup here where we had a retest 1, 2. I mean, you could say you go in here, but you'd have to have waited for the candle to have closed.
I got in at 08.
08. So
yeah, and then a stop at 2.5.
2.5.
Yep.
There. Yeah, so that
just
nice candle. Yeah, and then taking us up to there. So nice 2.5 hour, something like that. So yeah. Wait, Mike watches F1 too. Am I hearing an ABL F1 watch along while weekly prep in the weekends? Oh, Akram. If only I could. If only I could. My biggest problem is the time on the weekends. So my only reason I could watch the highlights was because my wife was painting some paintings or something yesterday evening, so I had a little bit of time whilst I was also messing around with some coding ideas and stuff. So
I don't know, maybe we could do a F1 watch party. I can host it on the Sundays. Maybe we could possibly do that.
There you go.
But some of them are at like 4 a.m. my time, which normally I technically am up, but normally on the weekend I try to sleep because I don't sleep during the week, right? So that's the only trouble. And yeah, Akram was saying before as well, like agree with LJ, something like gold, zero yielding asset outperforms S&P. it's harmful for the investor in a way for the risk on sentiment and an optimal liquidity outflow into sustainable bull run. Yeah, that's exactly it. And if you try to, there's various ways people value gold. If you value it as like a deep discount bond, accounting for that differential that it's zero yielding, fair price is about 3K to 3,100 from all the stuff I put together. So, if we come down and just sell around that 3K, and that's kind of the new area, that seems pretty reasonable. To be honest, we don't have chaos going off right now. We got normal Trump. It's always something, but it's not like the world's falling apart. We don't have any economic crises on the horizon. We've had a bit of the sort of war instability type things, geopolitical stuff, but nothing insane. Let's put it that way.
Yeah.
And that's sort of been to be expected as well.
Yeah.
So.
No, exactly. Just going back to that Aussie US dollar that we were talking about earlier. So I'm still not convinced by this sell. It was a trade idea that I put out for you guys in terms of what you could be looking at. I don't think it's the right one because I personally just feel that this one here is the trade. I feel like we've gone low enough, and I think going up higher is where we're likely to go for Aussie dollar at the moment.
I mean, on the daily, when we were at the lows, we were pushing 1%.
Yeah, exactly.
Total move for the day,
exactly on a Monday when there's no
catalyst. Yeah, exactly. Yeah.
So it doesn't seem reasonable now. Obviously, we've got the RBA stuff tomorrow, so that could just be positioning in preparation for that, right? And that's why we're seeing that sell off today. But I think expecting this to go further is a bit of a stretch of the imagination too far, even for me. Yeah. Gugum's asking for a narrative on the Dixie. Let's pull up LJ's Dixie, because LJ I know has got some fantastic Picasso lines on the Dixie. There we go. Yep. These lines
zoom out a touch.
They were giving me psychedelic kind of weird kind of messages earlier when he zoomed in and zoomed out on these lines. So
is that are those the mushrooms?
This is the one. Yeah, exactly. Yeah.
You never explained the mushrooms earlier, by the way. What is this? That
the woman that killed like her in-laws, her parents.
Yeah, I thought that's what you meant. Yeah. Apparently, they're already making a Netflix documentary.
That's not a surprise. Yeah. That is not a surprise.
Oh, I think it's going to be on Binge, though. But like
okay.
TV series documentary. Yeah. Wild stuff.
Yeah.
Only if you're Australian, you'll probably know what that is. If you're outside, probably unlikely. You have no idea what we're talking about. But anyway, as far as the Dixie, so all the way back here last week, it's looking for. We've got this. Let me try to zoom out just a little bit more. So we've got this sort of wedge. We've had this topside trend line going right back to the highs, those cap things. And then we've had this wedge formed sort of recently. It's not quite a channel. It's got a slight skew to it. But then, we moved out here. That was the only time, which was due to that. We had some of the other US bits and pieces of news, but basically just came into this cluster here, which was that like central band. So if we go out to 1 week even, hopefully that central band is kind of like the base of this higher range of price action that we've had between, above 99 all the way up to 110, 114 at extension for the dollar index. So that's that like mid cluster oscillation point, I guess. And we've now sort of firmly more established ground below. So from there, we're looking for, I'm going to move the chart a bit better. There we go. Move back down into that lower wedge that's forming up here. Down, up, gradually come and hit. This was the payroll, right? And we perfectly just came into this cluster of topside liquidity here with this area of price action that we broke down from prior and just buy the highs. So obviously, naturally, non-farm payroll, you get the excitement, you get a bit of a pullback, and then you tend to sort of get a continuation following that of the actual non-farm payroll data. We've had that pulled right into the top side of that wedge, right? And then that roughly clusters in that higher supply of liquidity right by the NFP highs. And now I would be looking for the price dollar index as a whole to come back off again and basically continue down within this trend. So you probably get like, again, bit of a pause point here. You got through here and here. So hence you get this guy tapping into there, another breakdown. This comes in here, come here, and then probably to the upside again. And that's sort of the general moves I'll be looking for through there. But yeah, I'll go freehand drawn Picasso movement has played out pretty well. So I mean, just looking at this further drive up, I mean, it's pretty clear to see you want to get a bit of a pullback from here on the dollar index as a whole. And then that lines up with our moves for things like the euro.
So Gugum, if the Dixie's going down, it means that XXX euro, I think you mean against the dollar or whatever, will go up, not the euro. So the euro against the dollar, yes, we would be seeing that going up. We would have seen the pound against the dollar going up, or the Aussie against the dollar going up, but not against the euro. So I'm assuming that's probably a typo. So yeah,
not against the euro, but anything against the dollar up. So exactly. Like we've got here, you know, euro dollar now gradually finally finding its legs, moving higher. We've had the pound continuing higher. That would have just hit my take profit, and it did. That's cool. We had Aussie dollar showing the same, moving up through here, right after finding support, and then US yen just lagging. It hasn't quite reached the top side that I would see as resistance for dollar yen. But basically the thing is you've got across, so the beautiful thing is when you find something like euro dollar coming near support, pound dollar coming to this support area through here as well. Right. And then you got Aussie dollar same deal with support there.
Yeah.
So it's always a good thing to check each of the assets in line with that and get the cross correlation between the lot, and then you can find an established move that tells you it's clearly indicative of a USD component driving a lot.
Yep. So my screens are flickering funny. These technical gremlins are still hassling us at the moment. But yeah, we'll see. But that Aussie USD is looking like a nice long at the moment. Looks like that's going to be coming in quite nicely. Mr. Silver's asking about the NAS. I can see you've got that up on your chart at the moment.
Yep. Just let me just touch in on my trades, make sure everything's all correct. Okay, cool. Yeah, so NAS I'm currently long on as well from earlier down here. We sort of leveled out with that bottom. Seemed as though we were struggling to make any further ground to match these lows here. And then if we go that trend line through there, that's basically what I was looking for to hold. We held that and bought in through here. This would be the first take profit. So around the interim, there's my brush, interim high with that spike from this morning after we gapped higher, as you can see there, and then retraced during early Asia, and then the T2 comes in roughly with the prior all-time highs up here. So that's what I'd be looking for. So it'll be a question of, particularly for today, because typically I'd like to exit these kind of trades for the day, at least given the structure we have now, and particularly with the possibility of some kind of tariff type headline threat, even if it's just interim, we could indeed see, you know, indices just like roll back off. You come down here somewhere, just from a Trump tariff headline. So you can see some of the past NAS trades I held over like a couple of days through here, right? But this, I'm just looking to exit for today. So if we only get to the T1 once US opens, then I'll look to take it there if we're fading momentum. If we drive through, I'll go for the top side. But yeah, once again, this is looking, we've definitely got that underpinning for the indices, so I wouldn't stand in front of it.
Mohammed's asking, are you going to be calling out anything for gold today? You talking about jewelry, what, necklaces, earrings? What are you referring to, Mohammed?
Buy a gold Rolex.
We have talked gold. We have talked gold and gold and gold and gold and gold and goldy gold. Gold, as far as we're concerned, is a sell, but it's probably finished for today. I don't know if it's going to have much more legs in it, but we'll see. If it does much. You know, we're already down almost 0.7% on the day. I mean, silver's down 1.5%. So I'd just be careful. Again, depends on what your strategy is, but I don't know many people that are swing trading gold. Most people are intraday trading on gold. So I wouldn't be looking for anything majorly significant on gold at the moment. As you can see, LJ's
Picasso over here. So we got this channel that's formed today in the later half of today. And that's basically what we're banging around in, oscillating end to end. So I mean, if you're trying to scalp gold, like I just play that range for now. We have come down significantly earlier since Asia. So like Mike was saying, we are sort of at the ATR for today. So chances are, obviously, my lower term target is down with this sort of band of liquidity down here. However, you know, we've reached the ATR. We've got this channel. Price decline isn't accelerating. However, we're also very much languishing. We're even making progressive lower highs through here in the bounce back right now. But I expect that we sort of just chop around in this channel descending. And then we get further down here. This, where we are on the chart, that is my time, is rollover. So then we come in tomorrow and see whether you can then get a break from that trend line, either higher, back up towards this 33.30-ish area, 25 to 30, or we break down further into Asia tomorrow and hit that band of liquidity. All things considered, my preferred thing with that would be that we, there we go, do come to that lower band. Again, we've had every reason to rise in gold. We're not rising. That's the market telling you something. We've had a massive, amazing run for gold for a long time now. Who wants to buy the asset at these inflated prices? You're not really looking at deep discount at all. You've got to be banking on gold going to like 4K or something to make any kind of reasonable trade, right? If you're like a large player that's actually going to move the price significantly. You know, so at this point, it wouldn't really make sense. And if you look at all the deep value discount models of actually pricing gold, you're looking closer to 3K to 3,100. So if, you know, you can put all these things together and see clearly that's about fair value. Why do you want to buy it 3,300, right? You know, even 200 points lower. What's that, like 7% odd discount? You know, I mean, so if you're a fund, that's what you're going to be sort of looking at. So, you know, we've clearly got the momentum to the downside at the moment. We had every reason to go up. We haven't. That was during this whole Iran spectacle. And we just couldn't get anywhere. That was up through here. And we're just like,
exactly.
Right. So if you look at this here, like, you know, price is looking pretty bearish and looks like we want to take these lows 32.50, go out slightly further, move down to here. Then if we break this higher area, looking down to 2960. So yeah, the overall construction of this, of price action from a technical standpoint of recent, is not confident for highs. Like, we really need to establish ground up here around that 14th of June, but we didn't. So
we've got a couple of minutes left. So very quickly, GJ, we looked at this earlier. I can pull that up on my chart very quickly. So GJ, it didn't actually pull back down to this lower area, to this previous resistance area. It's actually gone higher already. So GJ, I would be, I mean, you're trying to catch something in the middle of a move right now. So I wouldn't be touching GJ, is my personal opinion.
The 161 extension now from the earlier Asia high to bottom, high to low. So yeah, I'd be very cautious now. That obviously lines up with that prior high, as you can see. If you're jumping in here now, it's you're taking a lot more risk, basically.
Yeah, absolutely. And Fabian's asking for a quick look at Euro USD. So Euro USD pulled down. As we were saying earlier, there's support coming in now for Euro USD. We were talking about longs on against the dollar, so showing further weakness against the dollar. Slowly starting to build up that position, but it's tricky because if you look on the 15-minute, you've got a lot of 1, 2, and potentially 3 is closing in the next 3 minutes, 15-minute candles, and this one's being retested right now by this one, suggesting bearish momentum further. So yeah, just got to be careful on that.
Do you want to see what
Jonatan,
I got mapped out for mine? Just throw it on for a second.
Yeah, go for it. 2 secs.
So yeah, euro dollar, like, again, it's one of those things where, like, at the ATR we've had a huge fall, so just a technical sort of retrace rebound from here. I've got first interim target. Obviously we've just hit the mid of the volley 20 moving average, and just below that sort of swing peak there. Next points would be 117.40 to 117.50. Then I'd look for a bit of a pullback and continuation. So that's the 30-second view on euro dollar there. But yeah, I'm still sitting in this at the moment. So
cool. Jonatan did jump in, but then it looks like he went away to collect a very strange shaped pizza. Oh, there he is. I thought you went to get a very strange looking pizza there, mate. You're muted. You're muted.
Oh, okay. Kebab.
That was a kebab.
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 Nice.
Okay.
A kebab.
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 Lovely stuff. I need to jump off, guys, because I've got another meeting to run to. But
funnily enough, it's the same meeting that I'm supposed to be in. But then you.
Yeah, exactly. I'm kind of presenting at this meeting, so I kind of need to be there before you to be able to present to you. So.
Yeah, exactly. You're going to present to me, so you better join the meeting before I do.
So guys, I will see you tomorrow. If you haven't joined us in AlphaBeta Lab, make sure you join us, guys. Otherwise, I'll see you tomorrow. Cheers.
All right. See you soon.
Peace.
All right, Heldry, how's it going?
Going well, man. Doing well.
Nice.
Well, Monday morning, a bit more technical today. Quiet week this week for the most part. So there you go.
Yeah, I think it's going to be quite weak. Yeah, quite weak.
What type of kebab did you make? What have you got on the kebab?
Okay, so there's different kinds. I just had like.
Did you make it yourself or did you order it?
You think I made it myself?
I don't know, dude. You're cooking like crazy stuff all the time, right?
I do cook a lot. I do cook a lot. Yeah, I do. But this one, I ordered this one. I got my kid home with me today, so I ordered the kebab and then like a hamburger to him, and I got a little toy in and fun stuff.
Nice.
Yeah.
Nice. Alrighty. So wait, do you have to run off to this meeting as well?
Yeah, I'm waiting for Victor to come in and take over the live here. If I'm not mistaken, should be Victor and Diana coming in here, top of the hour. So, but
So I
that's
was
all
gonna
right.
say I can hang around, but I don't seem to have any permissions on StreamYard at the minute.
Yeah, I know
So
it's
I can't
weird.
add or remove myself or change the screen and stuff.
Yeah, I don't know what happened.
Yeah.
Oh goddamn it! Now there's birds everywhere. So I ate outside, and now there's like birds all over the place. Jag tror du fixa det där. Kolla om du skräm dem. I told him to get rid of the birds. Yeah.
Oh god.
Okay, so
Yeah, bird attack.
sorry, what?
You're getting attacked by the animals now.
Yeah.
Do you live on like the back of like a forest thing or something?
Yeah, I live quite close to the forest. Yeah.
Yeah. Okay. Fair.
It's a pretty cool place. I walk 2 minutes that way, and there's just wilderness.
Yeah. Dude, that's sick.
Yeah.
That's awesome.
It's pretty cool.
Also,
yeah.
what didn't you take a community gold long before? What happened to that?
I did. So okay. So,
I tuned in just when you guys were taking that. I'm like, dude, I'm literally going short here. I was like, oh no.
No, so actually, I did go. I did put in some limit orders, and it hit the limit order, but then it didn't get filled because of the spreads. So I removed orders for that one, but it looks like it was the right decision to close.
Yeah,
that
what level
one.
was that at? Because I then had to duck out to go to the grocery store before it closed.
I can't remember what. I can't remember.
Did you get filled at all, or no? Or just
No, I didn't get filled.
Hit later? No. Okay.
But you know what? I gotta jump out, and then Victor is there. He is. Nice to meet you, Victor.
Hello.
How are you?
Man.
Hello, everyone. I mean,
Master
humans. How is everyone? Hello, everyone. Humans and roosters included.
You are not real. Like you are
Also-
not. It's like, hello, humans. You're definitely an AI. You're like, hello,
my
human.
fellow kids.
How are you?
You know, it's that meme, dude. What's that meme? That's exactly Victor right now.
I love it.
Oh.
Okay, I gotta jump off. Now you gotta take care of Deanna. Victor, be nice. Okay?
Am I not
gotta jump
always?
off. Yeah, you are always. You're very nice. I gotta jump off and join this little meeting of mics.
Perfect, Jonatan. Have fun, do your thing, and we're gonna have a lot of fun.
Yeah, see you guys later.
Perfect.
See you, bro. Ciao.
How are you doing, LJ?
Doing well, man.
Okay.
Busy weekend, busy day today, but I did get some rest on the weekend, which was nice. Caught up with a few mates I haven't seen in a long time, so that was good as well. And then today's trading's been pretty nice as well. It's very technical at the moment.
I see.
We were just saying earlier with Mike, because there's not heaps of news and that kind of stuff at the minute. We've had non-farm payroll out of the way. We've had Trump's bill sort of put through. Very technical week, with the exception of looking out for any Trump headlines around the trade stuff, because we've got a few of those dates coming up, which they've sort of front run a bunch of that, but it's still something to look out for. So, yeah.
Perfect.
Have you taken anything today?
You said you yes, no, I'm not gonna repeat that. It's perfect, lovely. I haven't taken any trades today. But we have in the background, we have Dr. Deanna Cole anxiously waiting to share with us everything she has to offer, which is a lot. So pay attention, everyone. Deanna, are you ready to come on? Yes, you are. So here we have her. Deanna, how are you doing tonight?
Hello.
This morning.
Hello.
Yes. Hello, Victor. Good to see you. Good to see you, LJ.
How we doing?
I'm doing well. How are
Good
you
to
all
hear.
doing?
Going strong. Strong as ever.
That's great.
That is great. LJ, how is the sleeping pattern going?
Look, it's about the same. I take the weekends to get my sleep in, my beauty sleep, right? And then the
I see.
weekdays, it's very short. But the weekends, I'm just it's nap time, you know. So,
I see.
but,
Perfect.
Yeah. I'll tune out for now, guys. I gotta go make some food. I've not eaten at all today, so I gotta cook some dinner. So I'll leave it to you guys, and I'll catch you guys next time.
Please do that. We'll be here and we'll have fun.
All right, you guys are left in good hands. I'll see you later. Catch you tomorrow, okay?
Bye, LJ.
Bye, LJ. All right, Deanna, how are you? How are we doing? We're not sharing any screens, so let me go quickly to my screen to share mine. Let me see. So we have that one, right? So we we want our viewers to have visuals. They come for visuals. I mean the graph. I know we are good looking, but I meant the graph. Dr. Deanna Cole, how was your weekend?
It was awesome. It was awesome.
Yes?
It was 4th of July in the U.S., or not 4th of July, Independence Day in the U.S., so lots of fireworks, and it was really fun. And for the first time, I've never done this before, I took my dogs to a dog pool, which I didn't even know existed, but was really, really fun.
Yeah, I haven't heard of that before, dog pool, but it sounds fun, right?
It was really fun. How about you, Victor? What did you do this weekend?
Family time. Relaxing, got good doses of sleep, which is a little bit extra on the weekend. I think that holds true for a lot of people who are very busy. But in general, great. I'm nowadays I've always been very focused on health, but lately, last couple of months, I've been focusing on sleep. I think we have mentioned this before, and I'm getting some really good long sessions of deep sleep, and that makes me feel good.
That's good. Great way to start the week too, when you have a good weekend full of rest. Yes.
So I'm gonna maybe you can start off with the assets you are looking at, and if there's anything, maybe a trade you might have been considering. And I'm gonna be back in about a minute, very short. Is that okay?
Sure, of course.
All right, I'll put your screen on
there. Thank you. All right. See if we can make it a little bit bigger here. There we go. All right. Well, it's great to see everybody in the chat. Thank you so much for saying hello. I see a lot. Lewis, born in 2944, Abdullah, Nora, FX, Fabian. Thank you so much for saying hello. It's great to have you all here. And I would love to talk about the indices, but I see that there are a question on gold. So let's look at gold first, and then we can come back to the indices. So this is the chart on gold, and we'll start with the daily time frame here. This is what I'm looking at gold. So gold can be a really an asset that I really like to trade, especially when there are really nice moves that are kind of, extended moves one way or another. Even these down moves continued for a couple days and then continued up, continued down. So for me, it's a lot easier to trade in this type of price action where there's kind of a continuation. And what we've had now for quite a while, since mid-April, is just kind of really messy action. Initially, I was still trying to trade this, assuming that, this easier price action is going to continue. Never easy, of course, but like relatively speaking easier. But there's just been a whole lot of chop, sideways movement, kind of these flagging action, just really difficult for me to trade lately. And then as time goes on, we kind of started to notice that there was this cup type shape happening. Price had reached, this is all-time highs here. It had attempted again, couldn't make it, and then attempted a third time, couldn't make it. And so we drew this kind of cup looking thing. And then as time continued, we said, hey, this is starting to look like a handle. And so now we still have this kind of like handle looking shape. And I don't typically, patterns aren't typically what I incorporate in my trading, but if something like this shows up, my eye sees it. So right now for me, gold is a little bit messy, and I'm waiting for a little bit more clarity to trade gold personally. I have this area kind of marked out. So if this was the cup and handle, this would be the high of the handle. And it would also mean that price would be breaking above these two prior highs. So that's probably the area that I would maybe consider getting interested in gold again. Right now, though, you can see these blue lines mark out previous day high. That's something that I really tend to pay attention to. And currently, price is below the previous day low. So if price gets back above this level, that could be an interesting area to consider along if this is something that you want to trade. For me, I'm staying out of gold right now. So these are, not comments that I'm personally going to act on. But if price were to, took up that liquidity down there and then moves back above that previous day low, that would potentially be an interesting place to consider. But, as gold typically does, it does tend to kind of move in these, like the continuation down. Maybe this is another continuation down. Maybe we're going to get almost like a double handle or something. So for right now, for me, gold, I'm not going to touch it. I didn't see the question was asking, I think, specifically if we would take a look at gold on the 4 hour. If I can find, 4 hours. So looking at the 4 hour, I have the 4 hour down here, and you can kind of see this larger pattern that we drew. I guess my handle isn't there, but it actually looks smooth as, super smooth here. So actually, let's go ahead and put that on so we can see it, because it looks really clear. Let's put that there. All right, so you can see really nice kind of handle motion. And then here we can see that price is starting to push a little bit higher. So as price is going down and we have this series of lower lows and lower highs, now we're starting to get a higher high. Maybe this could be an area that price would want to push. But like I said, for me, the price action is just not clear enough to trade unless you're looking for a really short scalp. If that's something that you're interested in, maybe you want to play the downside a little bit further. But to me, I would prefer to see price come above. It's blue on this chart, but it's kind of pink here. If price comes above this line, that could be an area that would be interesting to go long. I think you're back, Victor. How are you doing?
Yes, I think I am back as well. When you say this line is where you start thinking about going long, is that the moment you start looking for a long, or is that the level you want to go long at also?
For me right now, price action needs to clean up a little bit. So looking at this price action, it's just been messy. And so anytime I've thought that there was something actionable here, it's just been so messy that it's not worth it for me to trade gold. I've been able to find opportunities elsewhere. So the two areas that today I would be considering, but I'm not actually, because I'm not going to trade gold, but areas that I would be interested in is if price comes above yesterday's close, if price gets back inside this little, above this level here, that could be interesting for a long, and potentially above this high here. So not a blind long, so not saying that I would long just because price moved above there, but it would get my attention again, and I would be more interested in gold. But for right now, I'm staying away from gold until we get a little bit cleaner price action.
We have someone, Steven, our good friend Steven Chipeta, or Chipeta, however it is pronounced, is asking, so what is it, do you think, what's the call on gold at current level? Is it bullish or bearish?
Well, for right now, I wouldn't go long or short. So the most current area that I'm looking at that I would consider a long would be if it was above the previous day low, because what that would indicate to me that's the thing. It's not really, in my analysis, it's not really bullish or bearish. It's sort of, it's messy and it's kind of consolidating. And it's kind of like, I like to think of it as, one, you're looking for probabilistic entries, but in doing that, you have to wait for price to reveal its hand. So right now, price came down and took out this previous day low. We might see continuation to the downside. So if that's enough for you, you could take a short here. The next area that I would look for is if price goes above this previous day high, that would mean to me that price came down.
Previous day high?
Previous day low. Came down, took out this liquidity, and then pushed higher. But we don't have that yet. So it's neutral for me. I don't see it as being an opportunity yet. This isn't strong enough to the downside that I would necessarily want to take a short on it. Although if you said you have to take a trade right now, maybe short would be the better play to see if you get a little bit more downside. But what I would actually want to do is wait for price to come back above this previous day low, which may or may not happen. We don't know. But that gives a more probabilistic entry then if price is above the previous day low to take a long.
By the way, Stephen, thank you for your greetings. We wish you the same as well. We appreciate you for being with us. You are a great viewer for sure. There was one question here. Victor, is that not a Quasimodo on the 4-hour on gold? Yes, it is. It is. I will show you and I'll talk about it. And we can discuss the areas where I would be looking for a long. For sure, no problem. But one little thing on Deanna on gold. If I like your chart on the daily where it is one single time frame, and you had those two blue lines, exactly those ones put up. I was looking at the open of let me see, what was it? The open? Yes, previous candle open on the monthly. And it seems, although it seems like we are just the open, right? So the open on the monthly on the previous one, it seems like we're flirting a little bit with that level. I will show that to the audience as well on my screen. But is that something you look at? Not only the daily previous candle open or close or low, but also on the monthly time frame.
Yeah, you can absolutely use it as an indicator of strength. And actually looking at the monthly kind of brings up further what I'm talking about. So we have this April candle. So looking at the monthly, you can see what I'm saying as far as when gold moves one direction, directionally, it tends to continue. So keep in mind, these are month-long candles. And you can see even to the downside, this is a long continuation. So these waves are easier to hop into. What we see in gold on the monthly right now, so April had this expansive candle where it hit all-time highs. So if you remember trading gold back in the spring, price was just rocketing higher. You could get some nice shorts, but really long was the way to be, very much so in the first couple months. And then after hitting all-time highs, we had this kind of like a blow-off top or exhaustion move, right? So price shot up and then just really sank back down quite a bit. Then in May, price never made it outside April's range. It stayed very much inside the range and in fact closed the month right where it began the month. We saw that again in June. So I believe, I don't have the high and low marked on here, but this is what we were looking at before, where this high was just slightly below this this one. So we have an inside bar, an inside bar, and an inside bar. We're only 7 days into the month, but right now this is just not really actionable for me. So do I look at the open and close sometimes? Not typically place my trade on that. I'm more looking to see what price is currently doing, and especially on the monthly, that's a little bit, that's a lot of time in there. So for longer holding positions, potentially, but for shorter swing trades, I'm just want to understand the directionality a little bit better. And right now, this is like a perfect area of consolidation where we have an inside bar and an inside bar and an inside bar. So we need to see price give us some indication of what's going to happen. If we could dip below the previous the previous month low, that could be interesting. If we could break above, that could be interesting. Right now, for me, gold is just in a holding pattern, and that's exactly what it's doing, is just kind of continuing to build this, build this little pattern here after a monster move higher. So, it just needs a little bit of time, and we might get a bit of consolidation here, and then eventually it will break one side or the other.
Yes,
so
I totally agree.
Answers your question, Victor, but hopefully that does.
Yes, no, I think it's a very thorough answer. I think it is. I totally agree with you. I mean, gold has been relentless in climbing, and it's holding its ranges for the last couple of months. Even though it's not advancing, but it's not retracing. It's not giving back basically anything. It grew. Of course, it's not at the all-time high constantly. But it came back, retraced. I wouldn't even call it a retrace. It just came back to the mean, some kind of a mean, and then is holding it quite nicely. Even though, of course, if you zoom in the hourlies, you will see it up and down. It would be a proper range to trade for. But it's I don't see it breaking down at all. The more you zoom out, the stronger it still is holding up, even though cup and handle would be it's a bullish, in this case it's a bullish structure. So it's actually reconfirming what we're been just saying, that these sideways movement isn't making it on the higher time frame is at all breaking that bullish bias we all have. But let me switch to my screen, because there is something I would like to ask that person. Who was it? I think it was, let's see, who was it again? It was CM Biayuk. You guys are making me really try my best, but I do. Let's see. Habib is with us again. Our recent dad, Habib.
Congratulations, Habib. That's exciting.
All right, so let's continue with. I'm gonna switch to my screen, and we can show the audience what we are talking about. Okay, so on the higher time frames, actually, let me first just slightly look at the. You will see that the levels are a little different compared to Dr. Cole's chart, because this is, of course, the CFD, and he is showing, you are showing, right, the futures chart. So it's important to understand, depending on what you're trading, of course. I'm from the perspective of the CFD, so I'm going to be showing the CFD's version of the price of gold. Looking at that, we can see that what we just said, right? It's been holding pattern. Basically, it's been holding ground. Nothing really much to say. It is still, at least in this price feed, it is still hasn't been creating any bearish structures, any bearish candle for that matter. Looking at the weekly, we are still within a range that was defined by these two order blocks. Both of them holding price in a tight range. It's too early to say how long this will last, and actually you can never say how long it will last. But I mean, these are weekly structures, so I wouldn't be surprised if it holds for a couple of weeks at least, and it's already been so for 6-7 weeks, so it could still last some more. Makes perfectly sense in terms of the time frames. There isn't anything here on recent price action, and other than the mentioned the order blocks on the weekly and the weekly bearish and bullish, both of them giving you some ground, some fertile ground to start a move, either up or down. So it's basically even in terms of probabilities if you're looking at price action broken down. On the daily time frame, however, the story is a little bit different. We have actually, I shouldn't say that. On the same thing that we have on the weekly, where we have a bullish and a bearish structure, both of them fresh, recent, meaning fresh, but also very tied to each other, even overlapping, telling you there is a long and a sell side or opportunity on both of them, which I would be taking when it gets to these extremes. On the daily time frame, even though it's a much more granular view, you are still seeing the same thing. And what do I mean by that? You have a bullish and a bearish quasi. I'll show you one by one. This is the bearish one. Bearish quasi, it breaks that neckline and then comes back to one of the two. It already touched the first one, and sometimes this happens. It comes back to that order block, that entry order block. It does not always hit, even if it's going to work. It doesn't always hit and then take off right away. Sometimes it lingers there for a couple of times, even comes back for a second time before it actually reacts. So that could be something that would happen or could happen. Or maybe it's going to retest the second one, the one below us, right? The current entry order block where we have. This is the bullish daily quasi, meaning for a continuation to the upside. I personally prefer this one because it is aligned with the higher time frame, right? What we just discussed on the weekly and the monthly. We're coming from below. We're likely to at some point continue higher. Maybe this is the structure it will be using to continue to have that continuation. However, at the same time, you also have a bearish quasi. And I'll show you, that's right here. You see that higher highs and higher lows, breaks that neckline, and you're looking for a reversal from this structure, which has now become a entry order block on that weekly, on the daily, I'm sorry, not weekly. So let's do that. I'm going to change it to daily. And actually, because it's overlapping with all these structures, I'm allowed to take the whole area, right? The whole overlapping area of the daily structure. So we have two structures, bullish and bearish, symmetrically opposing each other, giving you the same story. And this is multi-time frame analysis, right? A lot of the times, not always, but a lot of the times you will see the same thing happening, just a little bit different. On the weekly, what we will see fresh order blocks. But if you go zoom in, you will see on the daily that there are actually reversal patterns. Daily quasi, much more complex and clear ways that where you would be entering. So I like this. I would be taking both of them. So I would be interested in taking a short from this daily order block, a stop above that, and target the structure that created last. This is the lowest, the bottom of that structure. But of course, you would be try to see if you can extend this as up to the next maybe this low or maybe the next weekly order block. It depends on what structure is being created as it is in igniting or starting that impulsive move downwards. So that's one thing. And the other one is, of course, what we is the structure I explained before. You have a bullish structure with the quasi, bullish reversal, which has two entry order blocks. So I would be looking, I already left this from last week. I'm looking for price to come back into this order block, this daily, and see how it reverses. See if it reacts or not. And let's look at the H4 within. So this is a quasi within a quasi. This is, the things we want to see if you want to trade like I do, which is you have a weekly bullish order block, right? Weekly bullish order block that is fresh, right? So we have a weekly reason to look for a long, meaning also if we actually get a long signal, you can really have a very, far away target because you have up to the weekly telling you that this can continue has a good chance of continuing. You go to the weekly, to the daily, so the weekly you have a fresh order block. To the daily, you have a bullish quasi, right? With entry order blocks, two specifically. And if you go to the H4, right? So the quasi is much bigger, but even in here, right? If we go to the H4, what do we see? There is also a quasi. It is a quasi within a quasi. Nothing too strange for people who, been trading for some time, right? The fractal nature of the market. These patterns, they are recurrent, and that is I think the beauty of them. You can use them for all the time frames you want, and find that balance where, it's selective but not too selective in terms of the setup you're building. And where is the quasi that I am been talking about? It is, of course, this. Let's see. We have there you go. Right, that's the quasi on the H4. And it is, let's see, we have it breaks the neckline and is going down to, you look to the left, there isn't any other area than these two order blocks that are together, and they are overlapping. That's what I mean by together. Let's see, let me indicate this. This is the order block is overlapping, which makes it even bigger, which isn't something you want. It doesn't help us. But this is the area. So whenever price gets into this area, I'm gonna be going waiting for the H4 to reverse, and we can even go to some other time frame, let's say the H1, to indicate where exactly we want to be getting in. And this is one of those areas. You see here, we have one area here. Let me mark this better on the quasi, so we make sure that there are not too many order blocks. This one is valid. That's an H2, but it is above the H4, so it doesn't have the needed alignment. And other than that, we also have a H4 here, or H2, I mean H1. I'm sorry. Let me double check. So we have 1, 2, 3, 4, meaning I'm not going to be using this. So this one is invalid for me. This one as well. I need to correct that. So there isn't anything there. We don't have a signal, a valid entry order block on the quasi on the H1 yet. We need to wait for that. Let me check the H2. It has one with no alignment, and it doesn't have anything else. All right, so I can say this entry order block is valid in terms of the quasi. We'll have to say, I'm going to change this to a normal H1, not an entry order block, and I'm going to take away these lines. All right, this is just an area we have. It has some good probabilities above any other area, but it's not valid not according to my trade plan. So I'm going to be waiting and see, perhaps after we reach this level, if we get a new quasi being formed, which would be something like this. Very easy, right? Something like this. If it does this at the, after reaching that level, right? Something like that, I'll be all over it. I'll be all over it, getting in on the minutes, actually, not even on the hours, and see if it keeps on signaling and confirming the H4, the daily, and perhaps even the weekly. And this is a bold, it's a conditional. It's not a prediction. It's just a scenario. If we do get what I just mentioned, and which is the hourlies creating that quasi, confirming H4, and then daily, what we will then have is we can actually trade the weekly extension of this move, which would be targeted. Let me mark this on the ATR and see where it would be. This is exciting because that can be a huge area. Let's see. We have marketing in here. It is 173, which would mean 46. And let's mark where that would be. This is just a very not very precise, but a very good way to find where price would likely to hit with a high level of certainty, right? So 343, which is 3,638, right? So if we do get a weekly, and I see that Dr. Cole is going to join us shortly again. This would be my weekly target, right? So if we do get just a possibility, I'm not saying it's going to happen, but if we do get everything in line and it keeps on signaling increasingly, there we have Deanna with us again.
Thank you. Sorry, I was frozen.
No problem. I would be looking for a target up to that level, right? For this to happen, we will need to have a hourly alignment, which we don't have yet in H1 or H2, telling us that it is reversing. That could be a fresh order block or a quasi, a valid one. The H4 we already have, and then we would go to the minutes to get our entry. This can be a monster of a move. We'll see if it actually signals. So one, it needs to signal, and two, it has to confirm after the entry that this move is actually also happening on the higher time frame. So it means the same way as we did top-down analysis, it needs to do bottom-up confirmation, right? So confirming that this signal is a higher time frame setup. Awesome. I get really excited when I see these opportunities because they can be monster of trades, much more than the 38R trade that I showed you guys last month. This can be this can be really huge.
Yeah.
All right, so let's see in the chat, what do we have?
One of the things that I wanted to point out about gold is, in order to set up that monster move, you have to have constructive price action. And when that price action is constructive, a lot of times it means waiting. And I know that can be frustrating when you're looking for a trade, because that's not what you want to see, right? You want to see price action that you can trade right now. But I agree with you, Victor. There isn't anything to do for me at the moment, but it sets up good opportunities further down the road. So luckily for us, there are other assets that we can look at in the meantime to take action on while waiting on the move in gold to set up.
Yes, totally. The monster trades are not, they're not things you spot every day, not even every week. And they're not, if you're trigger happy, you have to really be patient, because they have to be perfectly aligned from the higher time frames all the way down to, whatever time frame you use as the smallest one, and then confirm its way back. Getting a macro trade already aligned for me to trade doesn't happen very often. I have one perhaps once every 10 days, something like that, or maybe once a week. But the thing is, most of them don't actually confirm back to the way bottom to the way up, right? So it turns out to only be a let's say an intraday trade or maybe an overnight, but that's it. But what I'm talking about is, not only waiting for the setup to validate and signal, but also be patient enough that you're only going to hold it longer if everything confirms increasingly in the time frames. And a lot of times it doesn't. Simply it doesn't. Only very few times, infrequently, seldom, it actually does everything it should do, and you can hold with a very good chances that it'll actually have that move. But there's no way. That's the reality of trading. We have no way of knowing which time it's actually going to continue, right? You always emphasize on your probabilistic setup, and that's so true. You only can do it's a game of probability. You take your chance, you wait for your moment, your opportunity, you take your chance, and you just wait to see if it plays out or not. And depending on the setups, a lot of time it doesn't, and that's okay.
And
yes.
Habib had a really good comment here too. Gold is unpredictable. You can make all the plans in the world. Gold will never follow them. And that's totally true about the market, all assets. You never know exactly what's going to happen. To Victor's point, that's why you look for the probabilistic trades rather than predicting where price is going to go. Because you're absolutely right. You have no idea. And that's not our job either as traders. We don't have to know where price is going to go. We don't have to know when it's going to make its move. But looking for probabilistic opportunities to get in one way or another, and then we can ideally capitalize on those moves. But I totally agree with your point, with your comment, and I think that fits as well with what Victor is saying. We don't need to know where the market's going in order to make money, and we don't need to know when it's going to happen and predict when it's going to happen to make money. We just need to keep our risk in check, take the probabilistic entries, and let the probabilities play out over time.
Yes, that is the way to go. Because if we think if we as a trader, we were to think that we actually, it depends on us in any way, shape, or form, it's just such a source of frustration, because reality is it's not. Probability by definition is uncertain. When anything that is, a matter of probability, you don't know the outcome. You just have, percentages, chances, probability, odds, but that's it. Even if something is very likely to happen, that's not certain. And that's the raw reality of being a trader. And the earlier you embrace that, the best it is for everyone, actually, for you and obviously for your results as well. We have some happy announcements in the chat. This is listen up, people. This is what I like about our community. It is these things. You see, we have Mr. Silver, who also became a dad recently and is asking for our prayers. I think that is wonderful. Yes, we do. We will support you in any way we can. Sending you all the good energies, prayers, and meditations your way, Mr. Silver.
Congratulations. That's such an exciting time. I'm also thinking, Victor, about your comment about sleep. And it's also a time when sleep is so hard to come by, but it's a wonderful time. That's super exciting. Keep us posted.
For sure. We want to see and be part of that experience with you, all of you, actually, not only these two individuals, but everyone, not only dads, moms as well. I mean, why not? Let's celebrate life. I like that positiveness. There isn't, I mean, what is more important than you're having your kids being born and watching them grow up? That is things to melt any heart. Let's see. I didn't mention something, but I will tell you right away. For everyone, this blue line, I didn't mention it before. I didn't mention it, but I didn't show it. That's the monthly open of obviously the previous candle. And you might ask, well, what's the point of that? Well, on the lower time frames, you will see how price is reacting to them. That's not coincidence. That is the actual level being hit and buyers coming in. And it doesn't mean it's gonna, shoot from here and go all the way to wherever. It just means that the market is reacting to a level that is widely seen, widely watched, observed, and probably even there are some expectations for these levels. When they're hit, people start thinking, okay, maybe buyers will come in again, and as a self-fulfilling prophecy, you will see these kind of reactions that on the lower time frames you can absolutely scalp from. Look at that. If you're not sure what I'm talking about, then keep listening, and perhaps it will be. Let me see if I can not move that trade. How can I not move that trade? Let me see. You see how price cuts in there on that level, and then reacts very clearly from a level indicating that on monthly open. I've got a sneeze coming my way from afar. I'm holding it back, and we'll see if I
let
will
it go. Let it go.
Let it be. Yes, maybe I should. Let's see. We have
Victor,
Indy. Yes.
Oh, sorry. Go ahead. I just wanted to point out too, if we're looking at gold, so on the futures market anyway, on the gold futures, what we're seeing now is price had dipped below that previous day low that we were talking about, and now it's starting to come up to that same level again. So here is the daily chart. You can see it dipped below the previous day low, swept up all that liquidity, and it's pushing higher. So this pink line, and here's the pink line over here, is marking the previous day low. If price gets back above there, that becomes an area that could be potential for an entry long. This is the low that it swept. So it wasn't a super, this isn't like a ton of liquidity here, but there's a swing low over here as well. And price came down, swept all that up, and is now starting starting to push. So a little bit early still, we're not above the previous day low, but if price starts to sort of come up to this level here and accept that level, then we could potentially see a push higher. And that, we don't know what's going to happen, but that could, for me, constitute a probabilistic entry.
I like that. I see that too. We have Marina in the audience as usual, saying hello to both of us.
Hello,
You better
Marina,
say
good
hello
to
to
see you.
both of us, Marina. Just kidding.
It's good to have you, Marina. I hope you're doing well.
Yes, yes, go ahead.
I'm starting to see a couple questions about Euro. I think it's Euro USD. The most recent comment is Euro USD, and there were a couple comments back as well. So I don't know if you want to pop over to Euro USD and
yes,
see what's going on.
I would definitely want to do that, and that's something that I on a personal level I like watching because I trade it. I not only like, I have to for my trading plan. So I'll definitely go there. And we have Brian from Buenos Aires as well. Welcome, Brian. Let's see what else before we switch to EU. There was someone very nice, Steven, our good friend Steven, saying, thank you for those nice words. That is exactly the idea. Actually, I talk about when I do top-down analysis, I start from the monthly sometimes all the way to the minutes. And it basically encompasses all the time frames that are typically used. And I didn't say this, or maybe I should say this more often. I didn't say this very often, but you can stop at any time frame and make a setup, frame your setup, your opportunity based on whatever has been discussed so far. So meaning you could do a monthly, weekly, and start just on the daily, and then it will be a swing trade. And if you continue with that top-down analysis, you get to the hourlies. It can be a day trade, and if you continue with the same top-down analysis, and I get to the minutes, that can be a scalp or perhaps a session trade. And you can, of course, this is what I do. I upgrade them, I expand them to, take some profits on the first scalp idea, and then leave the rest open for the rest of the day, and sometimes even for a swing trade. So it's very versatile. It's a one analysis that potentially can fit every type of trader depending on their time frames. But thank you for the nice words. You make me blush. Let's see. What else do we have? Let's see. Marina congratulating Mr. Silver. Yes, on the newborn. Yes. Not only Marina. I like that. I really like that about our community. I'm just kidding, Marina, but thank you. All right, so let's look at the let's go to EU. Yes, definitely. EU. Oh, there was something I think before, something on dollar, not on dollar, on was it on gold? No, it was no. It is on EU. It is on EU itself. All right, let's go check it out.
Can we hit on Born in 2944's comment real quick? So the comment is, this is a really good question. Is it high probability based on your setup, or is it because a lot of indicators and price action in line? So it's high probability entry because it's, I would say, high-ish, right? Because like I said, I am not trading gold right now. I have some longer term positions on gold, but from a short-term perspective, gold has been a little bit messy. It's higher probability because price came down and took out the previous day low and then pushed back above. So it's not based on indicators or price action in line. It's based on price action. I'm not sure what you mean by price action in line, but it's based on the price action, just that it took out the previous day low. And actually, now that I'm looking at it, there was a gap filled that I didn't notice before. So this actually took out the previous day low and also Tuesday's low from last week, and also filled this gap. So this is a decent entry, I would say. And it's probabilistic because of the price action, not because of any kind of indicators or anything. I hope that makes sense.
Because of the price action, right? That's what you just said.
Right. Mm-hmm.
Yes. Perfect. Les, I like that. Okay, let's check. One thing I want to also mention that, when we say high probability, and this applies to everyone, us talking here, but also someone in the chat, high probable, that's quite vague, because in order for anyone to assess whether something is high probability or not, you also have to define, what your stops are and what your target is. So when Deanna is saying high probable or high probability, that is within her way of trading, using her kind of stops and using her typical TP, right? For someone else, maybe having the same entry, but if they have a different stop loss, that probability quite likely will be different. If they have a different target, that probability changes as well. So you have to, I'm talking about the audience, whatever we say is high probability is always to be cognizant of the, within our perspective, within the way we typically trade. So keep that in mind, everyone. If we say this is high probable and you end up looking at that trade and you think it is a trade and it doesn't work out, make sure that you're actually also looking at the same way, meaning the same time frame, the same stops, the same distance. Because just for an example, if I were to take my stops on Deanna's entries, Deanna's will have profit, and I will probably, I don't know, but I will think that I will have stop loss because mine are very, very tight, right? So depending on who is applying what, ratios, what distance to stop, probabilities may change quite dramatically.
Yeah.
Okay.
And born in 2944, again, I just want to comment. It said, I'm sorry, I'm confused. No, that's why we're here, is to ask questions and, respond to your comments and try to be helpful. And so there's no reason to apologize, no need to apologize. It's a great question. It really is. And this is a good thing to look at. So, to Victor's point, you do want to be careful that you're trading your own system. But I know that when you're just starting out, or maybe you've been at it for a bit, sometimes it can be really hard to know, where to start or where to turn. And that's just fine to learn, from what somebody else is doing. And what I would say is there is a tendency, if you see where price has, I remember this day, we talked about this day as well, where price dipped below the previous day low. And you can think of it as sort of like gathering fuel to push higher. So it dipped below and then it pushed higher from there. That can be a probabilistic setup. You see that happen all the time over and over again. If you're just looking, here's another one that pops out. There were a couple swing lows, price dipped below and then closed up higher. So obviously you probably wouldn't be waiting for the close unless you're doing more like a swing trade or something. But this is a pattern that happens quite a bit, and you can look for and you can use it in a probabilistic fashion. It doesn't always happen, right? So here's an example. Let me see if I can change this so that it makes it a little clearer, where we have this swing low here, price dipped below, and intraday, it's possible that it went back above and then failed. So that would have been a losing trade. Or maybe it never did. Maybe it dipped below and it never went above. But on the very next day, here again, it dipped below and then pushed higher. Here's another one. It dipped below the previous day low and then pushed higher. So it's just something that you can use, a framework that you can use to look for opportunities that are probabilistic, and you can use that to your advantage. If price is taking out a previous day low, you would expect that it would continue lower because gold does tend to kind of continue in the same direction. If that doesn't happen, that's a good indication that liquidity was taken and now price is it's like cleared for takeoff, right? Cleared to go higher. But again, it doesn't always happen. And here, this would be a good case to study today. So it's a little bit early, but if we drop down, we can see that it just barely peaked above. So let's say that price gets, somewhere in this level here and kind of hangs out there, something like that. Maybe that's an area that you might want to consider seeing if price would continue higher. Obviously, there's a lot of nuance and whatnot with your stop, like Victor said, where you take profit. But if it comes back up here and kind of seems like it's going to stay up there for a bit, it could be a probabilistic entry. It doesn't mean that it won't fail, right? Any trade, even the best trades, can fail. But this is a good thing to start looking at if you're trying to learn price action and get better at price action. Looking at the previous day low is really, really helpful. So great question. No need to apologize. Always happy to answer any questions. And if you are confused, I would prefer that you ask a follow-on question. So that is absolutely fine.
Yes, indeed. We're here to help you out of your confusion, if that may be the case.
We've all been there. So,
yes.
That's just part of trading.
Yes, indeed. Thank you, everyone, including the universe. The universe. I thank you for those nice words.
I know that's especially a nice compliment coming from such a solid username.
Yes, I love that username.
I'm
always
glad to hear that. Born in 2944. You have a hard username, but I'm glad to hear that it's more clear.
Perfect.
Yeah,
yes.
That's exactly it. The bad player. It's just probability. It might or might not. Depends on your stop loss, right? And it also depends on, how much time do you give it. If you're like, what, if it crosses above the line, I'm in, that's higher risk. You're more likely to get stopped out, but that's valid as well. I want to see price kind of, maybe it doesn't have to be that high, but I would want to see price, kind of get up here and kind of stay up here. And if that happens, then, I would rather be long than short in that scenario. And that's true for the indices as well. That's just price action that can be really helpful to understand. And in particular, when you're looking at the daily time frame, that is something that can be really, really helpful to know about and to look for.
Indeed. Let me check here. Was the futures market closed on Friday? It was, right?
It was early. It closed early on Thursday and Friday. It closed at 1 p.m. Eastern time.
Okay.
So about 3.5 hours after the New York Open.
Okay, perfect. So I'm going to switch back to my chart because there is something just in the last couple of bars, something that I've seen on the futures price chart. Of course, I could have gone to the futures as well and check if the market was open or not. It didn't have any price for Friday, but that might be something that I have to check. Let's see if we have here the what I see is that we have a outside bar that was created on Thursday, by the close of Thursday, right? If anyone is wondering what an outside bar is, there are many definitions of these candlestick combination. But to me, an outside bar is when you have it's a 2 candle combination where the second candle exceeds the high and the low of the previous candle. Like in this case, I'm going to show you guys. So this is within, I'm going to move that a little bit because it is a kind of in our way. You can see very clearly, I'm going to take these out as well. All right, so we can see very clearly this is the high and the low of that candle. That's the Wednesday candle. And the Thursday candle, let's make that even bigger. It exceeded the high and the low of that candle, that range. Not only it exceeded it, but it also closed, either above or below, in this case below. So it's a bearish outside candle. And when I see these, these are, I call them order blocks on steroids, because they're actually they're even stronger than the regular order block. And the order blocks is then marked by the open of bar number 1. And the upper range of that order block is the highest point, which is obviously going to be on the second bar, because it needs to have exceeded the first bar. So it's always on the second bar. And that's going to be my order block that I trade from. The only thing in this case is that we already had an immediate retest. So that's one thing. An immediate retest is not the first retest. I know it sounds, doesn't make sense in a way. Yeah, I understand. It doesn't make sense. A retest is a retest. An immediate retest is also a retest. So it should be the first retest. But in my set of rules, the immediate retest doesn't count as the first retest. So the price can still come to that area and I will still treat it as the first retest. To me, that's the first retest. And this has to happen while that order block, that outside bar that created the order block, is still fresh. What is fresh defined by? I'll leave that a little open, because it depends on your strategies and how you want to define that exactly, where the line in the sand is drawn. But it is, a low single digit number, or a mid single digit number, not low, mid, right? So currently it's still very fresh. So I would be looking, and that could complement each other, right? So price could go higher and reach this area in the next couple of days, that is. And that it would be a great area to go short, because of course we have, let me move this around. Then we would have this order block as a target, and perhaps something in there on the lower time frames as well. So I think looking at the last couple of candles, I can see that bearish order flow, right? Outside bar bearish, and today it's showing as a bearish order block again, right? Confirming that outside bar. So it makes a lot of sense for me to wait for price to go a little bit higher, hit those supply zones created, and then take the short link. But this is only, of course, only looking at the charts in this time frame on the daily, and it's not something you want to be holding for very long. Just into a lower, maybe on the H4, you can find those areas. And obviously we have this area as a possible area we want to go long at, and that would be a perfect target for that possible short that I just suggested to be considering, meaning taking a short from this level. Your stop depends on whatever model you use for your entries, either a tighter within the order block, or using the actual time frame on the daily and putting it above that, and target that structure on the lower time frame, that is, because we don't have anything, which is that H4, and try to front run that market reaching there. If only it actually goes up before reaching it. If it reaches with the structure before, then the structure is no longer, the setup is no longer a viable structure or setup. Keep saying structure, but the setup is no longer viable, because the whole idea is that it is on its way likely to that structure on the H4 below us, but it might pull back before it does so, right? So if it foregoes pulling back, you don't want to be in that trade anymore. All right, so let's check on the chat. I'm pretty sure we have some great comments there.
I need to pop out. Victor, it's time for me to go. Just want to address a comment real quick. It says, is it worth it to follow a trade after your entry was lost, or was I just late? And to clarify, I'm not taking this trade. This is just something that I look at and that I keep in mind if I were to be trading gold right now, which I'm not really wanting to trade gold. until price action kind of cleans up a little bit. But again, it's really important to make sure it's not enough for price to just pop up. Like you can see here, it just barely popped up and then immediately dropped below. I want to see price, sort of stick. I want to see it come above the previous day low and kind of hang out there for a bit. And that's when I would get in long. So I haven't taken an entry. I'm not taking an entry, but again, if I were, it should stick, somewhere up in this box before I were to get long. Maybe not. I probably wouldn't enter that high up, but somewhere in there. So just keep an eye on gold, see what happens. If nothing else, just use it as a case example to study for the day. And gold still could move lower from here. But if we start to see it hanging out in this box, that's when I would really wonder if it's going to push higher from there. So everybody have a great day, and I will see you very soon. Thanks, Victor.
Again, thank you very, very much, and enjoy your day. May you have a wonderful day ahead.
Thank you. You too. Bye, everyone.
All right, so let's put the screens, the proper one. Let's see, bad player. A couple of things I would like to add as well to your question. When you say, what is it worth to follow a trade? When I hear that, I understand from your question, following as in recording it, but not doing anything with it, right? If that's what you mean, I think there is some edge, or there might be some advantage at looking at what happens after your trades are closed. Well, I'm not sure I understood the question correctly, because after your entry was lost, you mean missed? You mean missing your entry? If your entry is missed, that would need to be in your journal as a missed trade. So you have to treat it and journal that trade as well in your journal as if you took it. Not take it after the fact, but actually record it as a missed one, but do include it in your calculation to see how your results would have been if you did not miss any trade. So that it's actually very important to include it in your journal. That's one thing. And if you say, or was I just late? Well, it depends on what you're wanting with that trade. For example, in my case, there is a clear moment, a time where I enter. Exactly. That is the only time I want to be in this trade. Now, I could, if I miss that moment, I could put a pending order there and get into the trade if market comes back to that level in a short time. But once it starts creating structure in one way or the other, to me, that signal is no longer valid, right? I cannot use it. I cannot enter like 10 pips or 20 even, or worse, 20 pips at a different level after I miss my trade, because that's a complete different setup. It's not the one that I'm supposed to be trading, and I'm only supposed to be trading if I'm following my main strategy. It is that signal. So I need to enter very close to my entry or entry moment, entry price, and I can still have a little bit of room with that, but not too much. And if it's, if it moved away from me, then I just need to accept that I missed a trade and still log it, but as a missed trade. All right. Let's see. The chat is very engaging. I like that. High Status asking how many years backtest data you guys test for and say, okay, this model is good and can do challenges or personal accounts too. That's a very, very good question, High Status. I thank you for that question. One thing is, it's not only about the how many years of backtesting, although having a large period, a long period is very important, but it is more importantly how many trades you have, okay? So you could have, many years, but only perhaps 20 trades. Right? Especially if you're on the weekly or some high time frame, So it's not about necessarily on how long, how many years, but how many trades. You want to have, to begin with, you want to have, like 50 trades as a pilot, to get an idea. Okay, this concept does have, edge, likely has edge on it. It makes sense. It is worth my investment in time to keep on doing longer back testing. But ideally, you want to actually to get to the conclusion, okay, this has a very, I'm very confident that this strategy has edge. You want to have a couple of hundreds of trades. Okay, so 50 is not enough, but 50 is good enough to, preliminarily get a feeling. Okay, this makes sense. It seems to have some edge. I should continue putting in hours and perhaps days into backtesting because it's showing me it, edge. So I would say a couple of hundreds, maybe 200, I think is solid. If you have 200 trades and you do see edge, I think you can confidently say that strategy has edge. And conversely, if at 200 there is, it doesn't have any edge, you look at the equity graph and it goes everywhere and doesn't go anywhere, or it just keeps loading downwards, then you can safely say that this, doesn't have any edge. That's one thing. But the other thing is, and I think maybe that's what you mentioned, you said how many years. Well, how long the period you backtest from has a predictive value in the longevity of the robustness of the strategy. Meaning, if you have, let's say you have 200 trades in your backtest, but all of them are from the last 2 months, that's good. At least you can confidently say in the last 2 months, this strategy has edge, right? It's not randomly, it's not by chance that you ended up with profit. It is because it has edge. But think about it. Does that represent the last 2 months, represent really the same market condition of the whole year, the last year, or the last 5 years? Of course it doesn't. So there is something to be said about not doing it, not focusing only on, let's say, 200 trades or 300, but actually do it also have, part of that, of your backtest also include other period of time, meaning 2 years ago, a year ago, 6 months ago, maybe also 5 years ago, and compare, let's say, if you have the ability to backtest the whole period, that would be great. That would be awesome. But most likely, I don't know, depending on how your strategy is, how much time it is for each entry, and whether or not it's automated or not, you may not have that chance, right, to go very far because it takes a lot of time. So what you could do is do, for example, it's not perfect, but do, let's say, 3 months in the last 5 years, right? It's still a lot of time. It's 15 months, right? So, but you get a little bit of how, an idea of how the market moved and your strategy performed in each of the last 5 years during those 3 years. Even if it's not super profitable, as long as it's holding up, it's not, it's going sideways, it's already good enough, because those moments happen as well. But that's something that tells something about the robustness of the strategy, which directly will influence or have a saying in the longevity of your strategy as well. So it's two different things, right? The number of trades, but also back tested on different market conditions. So you have, high confidence or reasonable confidence that it's going to last in the future as well, when the market changes from high volatility to low volatility, or perhaps, I don't know, ranging market, trending market, and so forth. All right, let's see. Let's see what else we have in the chat. Thank you, Marina, for your great wishes. I'm sure Dr. Cole will see this. Dr. Diane will see this as well. Let's see. I'm checking the chat if you wonder. Actually, in the meantime, let's go to a a little clip we have here, and I'll be right back.
Listen up, traders. We got a new competition with massive prizes launching at the Fivers. The top traders, they will win high stakes accounts, and everyone in the top 100 will get a prize, including hub credits and bootcamp accounts. We're actually doing this every single Wednesday, week after week, so you will always have a chance to win. It's fast, it's free, and it's easy. All you have to do is just sign into the Fivers Hub, click on the contest on the left menu, and join the upcoming competition. We hope to see you all there. Good luck.
Perfect. We hope you're making use of those competitions because they are completely for you. They're focused to make you a better trader, right? I know, yes, I'm saying that. Competition to make you better. That's if you do it deliberately, right? Testing out your strategies, stress testing your risk management, and keeping on learning with each competition cycle. It's not only about focusing on the price, it's about focusing on you, the trader who needs to grow as a trader. Al Kahav says here, if a strategy gives you about 5 to 10% net profit per month by backtesting at least 2 to 3 years chart data, then that's an edge for you for sure. That is absolutely true. If that sounds, actually, that's very profitable if you can actually do that per month, each month, 5 to 10%, then you've got a jewel of a strategy in your hands. However, it's not everyone has the ability to do 2-3 years of backtesting. Sometimes, depending on how easy, how many moving parts the strategy has, it may take a long time to backtest 2 to 3 years. If you can, then great. But before you actually do 2 to 3 years, and especially if it takes a lot of time, I would recommend doing a little pilot, a little test before you actually commit to do the whole thing. Meaning, test about 50 trades first. That could be a couple of months and of data that is. And before you decide to really go for the whole 2 to 3 years of backtesting, and then do your analysis, right? You can do a preliminary analysis looking at the first 50, see if it makes sense or not, right? You don't want to be wasting your time, spending perhaps weeks doing that backtesting, and to find out it doesn't have anything. You could have seen that coming from, at the first 50 trades already. And not only that, but when I say backtesting, it's not just one backtest that you do, right? There is a whole process of system building that you do something in the range of, let's say, 20, 30 to see how different variables and different parameters in your strategy affect the results. And you can play with this, meaning you change a couple of things, you backtest 50, and you compare that to, let's say, just an example, you have an ATR filter, right? Or some other indicator, or maybe any rule you may be applying to your strategy, you can tweak them a little bit to see if it makes the strategy extract edge a little bit better, a little bit more profit without increasing the drawdown. And by each time you change something, you should do the backtesting again. So it's when you say 2 to 3 years, that is when you already have optimized all your parameters, and you're testing it for longevity and for robustness. But at the first few times that you're doing your the optimization, you're constantly doing 50 or some amount that makes some number that makes sense to you. So you got to understand, when we say backtesting, it's not just one run. It's multiple runs as you're optimizing, and then longer runs when you have something that is as optimized. You don't want to over optimize it, but you're in the sweet spot of these parameters where they are at their best values. I hope that makes sense to everyone. It's a little bit abstract, but maybe someday we will discuss this in more detail. Great. We have many questions here. I like that. I really like that. In the meantime, don't forget to press the like button. It is there for a reason, and that is for you to press it. Subscribe to the channel and make this channel even bigger and help us grow. It depends on you guys. Help us keep on growing, hitting those numbers that we want to see, and help us reach more traders in the industry. All right, let's see. Let's check here. High Status says, I tested my strategy like 4 years in about 400 trades, 100 per year. And so that's about 8 per month. You're probably on a high time frame, and averaging 100 yearly returns. That is awesome. That is absolutely great, my friend. I wish you, a lot of success with your. It seems like you don't need my good luck wishes, but that's great to hear. Okay, Vinicius says the competitions helps me to improve a lot my strategy, but unfortunately it's much more easy when we don't have nothing on risk. Yes, that is the compliance of our strategy, us to the trade management, the trade plan. Very easy. That's why you cannot stay forever trading a demo account. Demo account is for testing a couple of things, but for the psychological part, it doesn't really help you understand the emotions you go through as you go into the trade, as you are almost closing it, or as it's going against you, or especially when you are in drawdown, right? In competition and demo accounts, it is especially demo account doesn't have any skin in the game. Competitions, you still have the chance to win some prize, right? So if you mess up and you hit your the loss is not only your time, but also that opportunity of gaining some prize. So it is a little bit better, I would say, than demo account competition, that is, but still not ideal to teach us how to manage our emotions as we are in the trade, and it fluctuates against us or even in our favor. All right, we have some great question here from Atharva Bakali saying how to control emotions while in trade. That's a very nice question. Actually, I think it is a bit broad, but I think still I think I can say a couple of things about it. One of the things is your emotions, even though they are yours, and they are modifiable to some extent, you're not going to eliminate them completely. And sometimes simply they're not, you can't really control them. What you can do is control your behavior that you have, right? So even though you still feel them, maybe less with time, but you will still feel FOMO or still feel certain things. But what is important is to focus on what do you do with these feelings. Do you, let them overpower you? So even without controlling these feelings, if you just let them be, write about them, think about why you're feeling them, but not acting upon them, that already is plenty of growth. There are plenty of opportunity or chances for you to grow out of them, making them undangerous or irrelevant, because it's still, even though you feel these emotions, you have them, they don't convert into actions, right? So, and I think that is the easy, much more easy thing to focus on, because in the end, controlling emotion is you can 100% control them, right? What you can control is your action. What are you gonna do about them? It's the same thing as with in your daily life, right? Sometimes things make us angry, for example, right? But it's about anger management is also about looking at things differently, but also what do we do with those feelings? Do we just watch them, and let them be, and that's fine, right? That you can apply that to your trading as well. So focus, I would say, more on your behavior, write about them, observe them as you're feeling them, and afterwards as well, describe them, write about them, and look at ways, the triggers, look at the ways that you could see this differently. Take a step back. That's also very helpful. For example, you missed a trade. Look at, is that trade that important? Did everything depend on that single trade you missed? No, doesn't, right? So all these things, reframing and focusing on your behavior, journaling about it, all these things can help you greatly in managing you and your results, and less focus on managing necessarily or controlling the emotions necessarily, just managing ourselves. All right. Awesome. We have 1,050 watching us right now. That is great. Good numbers. Okay, let's look at the market, because I think Bad Player here is saying emotions comes with when you have less money, like not financially good, then pressure comes. You start panicking cause the money you're risking is a lot to you. That is my situation. Okay, yes, Bad Player. Yes, in that case, that's one scenario or one situation where the trigger, right? That's the same thing as you're over risking. That's what I refer to, observing your feelings and write about them, analyze them, seeing why are you feeling certain things? What is it that makes you want to take the trade even you missed it? Or why are you super fearful about a certain trade if it's just one trade? It shouldn't matter. If you observe your feelings and you think about it, you analyze it, you will then be able to find things like you just mentioned, right? Where you probably, in your case, it's very obvious that you're over risking, in the sense that the loss is too big of a loss to you, and that is always different for everyone. But if the amount is too big to lose, you will start feeling fearful, and that can dominate your behavior, because you're no longer trading a plan. You're just trying to not feel the pain, not get a painful experience, and that's a very bad position to be in as a trader. So if any trade, this holds true for everyone, if any moment in your trading period you feel fearful, you should look at if everything is according to the plan, not over risking, or maybe the plan is inadequate. That could be as well. But you should look at why you're feeling these ways, this manner. If you are fearful of losing that money, you probably need to start lowering your risk and not risking less. Just break it down to a much more manageable level, where you can win or lose the next trade, and it should not elicit any strong emotions whatsoever. Okay, perfect. Looking at James asking, Victor, how long have you been losing to the market before you became profitable? And about 2 years, 2.5 years, I was playfully unprofitable. Would see some very little profitable periods, but I would say in general not profitable. And it was after the second year that I had more periods where there will be more consistent, more longer duration, where I would be profitable. But still, I didn't have the consistency to be the whole year profitable, right? So I had moments where I was longer periods of profitable moments. It was after that, about the third year, the fourth year, that I started seeing consistency. So it's there we go. It takes, but it's nice to know how long it took one person. In my case, it took me 2 years, and then it wasn't perfect after that period as well. But it's different for everyone. It depends on how much time you have. Are you being guided by someone? Are you? It depends on many things. So it's not something that needs to be the same for everyone. But that was my experience. Okay, let's look at EU. Anyone wanting to watch EU? I think we had a couple of messages about EU. I think one was from Ankizanu. Yes, Ankizanu. Let's look at your. Let's look at EU. All right. So what do we see? We start from the top-down analysis. We have 30 minutes left in our stream. Don't forget the like button, subscribe button, so we can continue to give you good content and help you become more profitable. That's our goal. All right, so if you look at this, what do you guys see? It's not much. It's not much at all, right? What I see is this. We do have a reversal pattern in here, a quasi that is, but that quasi is within an even bigger quasi, which is this. This is the head, left shoulder, the neckline, and we broke the first time, came back, created the right shoulder, and we broke that low again for even lower one. And now we're coming back to one of the two entry order blocks on that quasi. That is this one and the one above it. I'm not too interested in the one above it because it is quite wide, as we can see, not very helpful, but it is there and we can still use it, be it in a different fashion. And I'll talk about it if and when that opportunity arises in the future, right? Because it is the monthly time frame. So it might take a long time before we actually reach this area and it, triggers in a signal and so forth. But what we do have is currently the market is reacting upon this monthly entry order block of the quasi, right? This is the head, the left shoulder, the neckline, and it creates the first right shoulder, and this is a valid second right shoulder. Yes, a second right shoulder. I said it correctly. So yes. So to me, even though it is still too early to say anything, it's only been 7 calendar days, but this little reaction, may not seem like a lot. It may seem random, but to me it's not. It's the order block, the supply area that is the order block, pushing price lower. To me, that is why we have this currently a red candle from that area. But we don't have anything else, right? So we'll have to wait for the market to actually give a signal for us to have a monthly signal. That's not going to happen soon, because in order for it to happen, it will have to close below this order block for us to indicate. That will be one indication of a seller's taking control. That's not likely, at least not yet. I don't see that happening. Maybe later we can assess that, but I think that's not going to happen. If we look to the lower time frames, the next level, that will be the weekly. What do we see? We don't have anything except that we do have a weekly structure here below us that hasn't been retested yet. If only I can get these arrows to work. So we have a weekly order block that is still fresh. And if and when price gets there, we could be looking for a long, but only if and when it gets there within a certain number of bars after its creation. That hasn't happened yet. So there isn't anything for us. Other than that, there's nothing else. The daily, let's look at the daily. Let's move some things around. These notes that I have, these notes are from the workshop that we hold on every weekday in our Discord community. If you're not part of it, join us. The only thing you have to do is buy an account with the Fivers, in your personal page, you will get a link at the for Discord, and that will give you access to our wonderful community where you can attend this workshop we have. And the community is completely free, right? The only thing you have to do is buy an account, and you get the community completely free. To join, it's you just try it out, and you'll see how great it is to be part of such a community as ours. Without a doubt, I would say it is very possible to have lots of improvement in your trading skills by being part of a great community as ours. Okay. So the daily, we went to the weekly. The weekly didn't have anything. The daily, we don't have any fresh order blocks or entry order blocks on the daily either. There is an entry order block here, but by now it's already how many weeks, how many candles have passed since its creation, right? Already 10 bars, meaning not a single digit anymore. I mean, you could still trade it when price gets there based on that order block, but I wouldn't do that. So I'm going to take it away. It's not part of a quasi, not part of a actually, I'm going to leave it, but obviously I know that that's not something I can trade anymore. I'm going to make it smaller. Yeah, that's it. We don't have anything. There are no reason for me to trade this this daily time frame. We might have something tonight, right? A bearish order block, but we'll have to see how that closes. So I'm gonna put it now, but actually we should wait for the end of the day to see if it actually closes as a bearish order block or not. Now the H4. When we have this, and this is something this is a trade I took on NFP. If you want to see that, check our stream for Thursday. That is around the time NFP came out. But what I see is we do have an order block, right? An H4 order block. But if we measure, right, from the candle that created that order block to its first retest, even though it did bounce, right? It wasn't a single mid single digit number of bars since its creation, but it still had a very nice move or reaction from it, even though it was on the back of that NFP. However, I wouldn't have traded it because of the fact that it is no longer fresh. And today, actually not, yes, today, it is the second retest, right? So even less reason for me to trade it. So I do see it, but it's not something I want to be trading. It's not a high probability order block to be trading from. Not only that, and we don't have anything on the higher time frames to indicate that we could have any, we don't have any confluence that there is some reversal pattern coming up. There isn't. What we have is basically the market making. This is let's see, did we get a higher time frame? Let me see if there's a higher top. Actually, we did. The high on this is 10.01 and this is 10. So one pipette higher, you would call that for certain. That would be a double top, right? So equal highs. But afterwards, you can see lower lows and lower highs, right? So to me, this is a very weak market structure, even though I wasn't going to buy from it anyways. And it can still have a little pop, but I won't be trading it. You could, but I won't. I could still have a little pop, but it seems to me that this is just a matter of time, that this eventually will break down. The H4 doesn't have anything except a bearish order block here, which if we get there while it is still fresh, then I would be looking to short that. There isn't anything else. That's it. Let's look at the Shakar Shah is asking, what indicator are you currently using? I'm not using any indicator. Not on the chart in any case. I do from time to time check the ATR, which is an indicator, but on the chart is it just, you know, order blocks. You could argue these are indicator as well because they indicate something. Yes, but in the technical sense of indicator, like EMA or some, you know, indicator that signals something, that has a formula and is seen on the chart, I don't do that. I don't use any indicator except the ATR. Okay, so to me, there is no reason for me to look for a currently the place where we are on the hourly. There is no reason for me to look for a long. Were this to close as a bullish order block, right? So the current price action, if it were to close as a bullish order block, then it would change what I just said, right? We would have done a fresh order block on the H4, but that hasn't happened yet. So I'll have to wait for that to close and perhaps take a trade like this, right? But it has to also, you know, comply with my other checklist that I have. That is one thing, but that is not, hasn't been closed. It's not actually there. It's an order block in the making, but it hasn't been made yet. And an open candle can't really be used. I mean, I've been there many times, and a lot of times by the time it closes, it's no longer what you thought it would be. Okay, let's see. We have one person here. Divashish says, hi, today I blew up the account 5K challenge and I feel like a loser. Is it okay to feel like this? What do you guys think? Let us know in the chat. What do you guys think? Is Divashish correct to feel bad about this or not? I'll answer you in about 10 seconds, but I'll give you all guys some time to think about it and write. All right, let's see what else. Okay, Vinicius has a question. Can you suggest to have a time on Discord to healing traders that face losses on founded account or several challenges? Looks like can help our community a lot. Vinicius, thank you for that suggestion. Sure, I can certainly think about when we should be doing this, perhaps today or perhaps tomorrow. But I think it's a great topic to discuss because it's a very common question or common issue, right? If you don't have consistency or if you're struggling on your psychology or so many other reasons, you will lose these accounts, right? Sometimes very quickly, sometimes it lasts much longer. But if you're not sharp on every part of your game, your strategy, your risk settings, and your mindset, and all of them, you're not sharp of them, all of them, consistently, then chances are at some point you will risk losing that account. So it's something that I think we can certainly talk about, Vinicius, on our Discord session, our workshop. In the meantime, let's go back to that question from Gamer Mingle. Gamer Mingle. Feel like a loser. I don't know exactly what you mean, how negative that is to you. There is one thing is it is okay to feel bad about it, right? It is okay. It's completely okay because, right, you lost something. It didn't go right. Something is not right. Something needs fixing. So it is okay to feel bad about it. I would say, though, you want to be careful about feeling negatively about anything in trading. Instead, feeling like a loser, if you mean like a couple of, like an hour, half a day or so, or less, that's fine. I mean, you feel bad about something, you want to, digest the loss. But very quickly, and this is where I think the distinction about where it's still okay and no longer okay, very quickly you need to convert this loss that you had in a lesson, right? Because if you just stay in that mindset of feeling bad about yourself, it's not going to help you. Okay, it's only going to drag you down. You're going to be in more doubt about yourself, your skills, and your possibilities. That's not good. Okay, what you do have to do is take that energy, that loss, the fact that it didn't work out well, take that and use it for something positive. Meaning, okay, I lost it. All right. I'm not a trader yet, or I'm not a profitable trader yet. I don't have consistency yet. I'm not mastering the skill. I haven't mastered the skill yet, right? I understand that fact, but let me now look what went wrong. Why did it happen? And the best way to do this, of course, is that hopefully you had a journal where you journal every day and about how well you follow your trade plan, how your feelings and thoughts were as you were taking those trades, how your emotions were. And by looking at your journal, that would be the greatest, the best place to look to find the answer. And when you do have an idea about what could have triggered, what was the cause, then you can start with a plan. Okay, what can I implement going forward that I have a better chance that I can avoid that cause or that factor, that thing that caused me to lose the account last time, right? Whatever it may be. If you convert that loss into a positive growth mindset where you're just seeing it not as a failure, right? You're not a complete loser, you just lost an account. You change that into something, okay, what can I learn from this experience so that I can do it better next time? Maybe next time you'll still fail, but at least you will not do the same mistake that you did this time, right? It might be another lesson you have to learn, right? And sooner or later, if you have fixed and corrected many of the things that you're not doing right, sooner or later you'll see that you will likely get closer to passing or even start passing these challenges or maintaining your account if you're already funded, right? So I think it is about not marinating yourself in the bad feelings, but use it not as a failure, but a opportunity to grow, as a stepping stone, as an experience for you to become better. All right. And if you have more questions, Gamer Mingle, come to our workshop in the Discord platform, and we can surely talk more about it, in that hour and a half that we talk about these things in our Discord, as I said. Okay, let's check GU. Anthony wanting us to check GU for sure, because EU to me is, there isn't anything here for us to trade. This is not a quasi, that is not a had, a bullish had. Yeah, so there to me, I'm not even interested in doing anything here. I could still trade, but not my main strategy, the one that I talk to you guys all the time. So let's look at GU. No problem. That is why we're here. We're here to help. I'm here to help you as much as best as I can, and that's it. That's the whole purpose of these streams. Okay, so the monthly time frame, though, it's going to be very similar to GU. That's even though they're very, very similar. Although here there isn't a bigger quasi. The quasi there is only one, but still it does not matter. We do have one entry order block, and that's where we currently are. If we do get a signal, I will be all over it. I will explain it and share with you guys where you could consider to take a trade, or look for an entry in your strategy, including that monthly structure. On the weekly time frame, there is one structure, and that is this order block on the weekly, which is still fresh. Let's look at that. It's slightly different than EU. Right, that is the weekly order block. It's not an entry, it's just a weekly. There you go. All right, so whenever price gets back into this order block, and actually it already did, but remember, earlier I talked about this. This would be an immediate retest, right? It does not constitute a first retest to me, right? Although, logically speaking, it is a retest, so that was the first one. But to me, that's not the first retest yet. That's an immediate retest. It can happen. That's not. I don't throw away these opportunities when they happen. Okay, so we have a fresh order block, and if and when price gets there, I'm gonna be looking for that quasi to form, probably in the daily time frame, to get the ignition, the continuation from that structure. It hasn't happened yet, but that's what we have. Let's go to the daily. Okay, so what is the daily telling us? We do have a quasi here. Can everyone see that? Even though EU and GU are very, very similar because they both react to the dollar, right? They have the dollar in them as a pair, quasi daily. Okay, so do have, actually, this isn't a daily. This isn't a quasi. Who can tell me? This is a quasi 2.1. Why isn't this I almost consider this a quasi. Can someone tell me why this isn't a quasi? It's a little bit advanced question. At least quasi advanced, I mean. Not quasi advanced, but I mean advanced on the topic of the quasi, of the pattern. Can anyone tell me why this isn't? For a couple of seconds, I thought it was a neckline. Can anyone tell me? If you can, that's fine. Don't feel bad about it. I'll explain you anyways. But can someone tell me why this isn't a neckline? This isn't a head in a left shoulder in a inverse quasi. I'll give you a couple of seconds because there's a delay. Marina says, I like that, Marina. I appreciate that. I don't know. Okay, that's perfect. That's perfect. Pipotamus says, neck became a new head. The neck became a new head. That's the bearish one, right? The bearish, the bearish quasi. I understand that, but that's not what I'm looking for. Thank you for that. Let me close that. I understand that it was broken. There isn't a bearish quasi. I'm talking about the bullish quasi. The shoulder. Manny says, don't know. I like that. I like that. There's nothing wrong about saying something that you don't know. It is actually preferable saying, I don't know something. I'll tell you guys. Maybe because of the directional bias you have for the month. No, this is this is the reason, right? The first thing. What is the first rule of a quasi? Anyone? What is the first thing you have to do to have before you start thinking about a quasi? Anyone? What is the first thing that I say all the time? Before I have a head or a shoulder, one thing we say first, that is, we need to have a established trend, right? If we're looking for a quasi, a bullish quasi, right? If we're looking for a bearish quasi, a bullish quasi, keep doing that. This is what I'm looking for, right? This being the head, that would be the left shoulder, that would be the neckline, and it goes out. If that were true, then we need to have an established, let's look at that, an established downtrend, right? To have that reversal. But is that a downtrend? Can we say this is a downtrend? looking at lower highs and lower lows. We have lower lows, but we don't have lower highs. We have higher highs. So it's not an established downtrend, right? So that's the first thing. Quasi is not a quasi if it doesn't have an established trend for it to reverse, because otherwise there's nothing for it to reverse. So looking at these swing points, I did that little mistake, but very insightful, right? This is not a neckline because this high is lower than that. It needs to be higher, right? It needs to have done something like this for us to look for the quasi, right? I mean, something like this, that would be valid, where it has a lower high and a lower low. Then you would consider this the neckline. If not, then there is no quasi. All right, I hope that's clear. So there is no daily quasi. So what else do we have? We have an entry order block here. Is it? No, we don't. It's not an entry because there's no quasi. It's a fresh order block. Let's measure it. It doesn't seem fresh to me anymore. Let's measure it from the beginning, from the creation. It's already 10 bars, right? So it's not, to me, it's not fresh. You could consider it fresh if you have the data to back it up and that fits your trade plan, but I don't touch it and I don't consider it. So basically, it means that I won't be trading this order block when it gets back to it. I will still leave it, but I can trade it. I can anticipate that price will have some kind of reaction from it, but it will not be a basis, a signal for a daily time frame for me to get long. So what is there left? We have this one. This is fresh, but nothing below us. We do have a weekly, but this is the daily. So the daily doesn't tell us anything, and obviously this order block is still there, and I see it, and I might trade it, but not on my main strategy because obviously that isn't fresh either. Let's go to the H4. Now H4 is a different story because H4, can everyone see this? Right, we're coming from below. We do see that established downtrend. You see that? So it is a quasi, but just it wasn't on the daily. Right, so you have to consider and understand what time frame each structure is pertaining to. Right, if it's is this an H4, an hourly structure, or a daily pattern? Right, hourly pattern, a daily pattern, and you have to treat them accordingly. Okay, so this is an H4 order block. So if it is H4 order block, we're running out of time. But I think I can finish this, right? This is the 50% retracement. So we're going to be looking at structures. And by structures, I mean order blocks that are below, or it is beyond the 50% retracement. But in this case, because it is an inverse quasi, you want to be looking for structures that are below here, visually below. Okay. So what do we have on the H4? We only have one structure. This has been invalidated. This is the structure, and we do have an order block here on the H4. So I would trade this if and when price comes to this area for a bounce, right? And the place to put your TP, the last place to put your TP, is all the way the top of the structure. Okay, doesn't mean you have to only put your TP there, but that would be the end, the last TP. But you could use your ATR, you could use first trouble area, your FTA, to get your targets, and all of them are valids basically. But we are not there, so it doesn't give us anything for currently. On the recent price action, so looking at this, I don't see anything popping up. We do have this order block, but as you can see, by the time, look at this, by the time price reaches, this is the first retest. Would you agree? Right? All of this is the immediate retest. Right? It never left the order block. This is the first retest. However, if we measure how much time has passed since its creation, it's already 13 bars. So I'm not interested. So I'm not going to be shorting that. It is there. I can still use it for other purposes, but not for my signals for my quasis. And let's see if there is a borderline order block here. The open was 17.4 and the close was 75. So yes, I will consider this an order block. That's a fresh one. Let's go to the lower time frame to see nothing here. That's a nice V-shaped recovery, but no quasi, and nothing here either, right? So I don't see anything. There is, however, there is on the 1 hour, I mean, there are two structures or two order blocks that are still fresh. And let me see if this is valid. Let me double check something on another screen that I have in the background. Would I consider this valid or not? No, I wouldn't consider that. That's too wide of a structure. Okay, so that means that it leaves me with nothing. I would have to wait for price to come back if and when, and see if I get that reversal from, and then I could have the H4 and an H1 or H2 signal to take the trade. If not, I'll just let it go and, I don't know, be fine with it. All right, we have come to the end. It is end of the hour. We have come to the end of our stream. I hope you enjoyed it as well. Let's look at the chat before I do so. Very clear. Thank you, Marina. No problem. I like that. Okay, let's see. Osgur saying, hey, just got my first payout. It doesn't feel real at all. Right? It's unreal when you finally get to that point. It is. But that's what's possible when you progress and eventually hit those milestones. Okay, that's it. That's it for today. No problem. Thank you very much, all of you, for for being here, for your attention, and being part of our community, our YouTube community. Thank you. We really, really appreciate you. That's why we do all of these giveaways, and that's why we soon will have another one again. Keep hitting the like button. Keep subscribing to our channel. The more you do that, the faster we will hit our next milestone, and we will be celebrating that with you by giving you free accounts for you to try and test and pass and get some nice payouts. All right. I invite everyone for our Discord session that will start in about 43 minutes. And if you're not part, you can there's still plenty of time, so you can get an account and get to the Discord community. It's in your hub. After you buy the account, you get your access. If you are still in doubt, check with the chat, the support agent, to see, have them help you get access to our Discord community. That's it for me, guys, and us as a whole team. I hope to see you tomorrow again. Bye-bye.
Listen up, traders. We got a new competition with massive prizes launching at the Fivers. The top traders, they will win high stakes accounts, and everyone in the top 100 will get a prize, including hub credits and bootcamp accounts. We're actually doing this every single Wednesday, week after week, so you will always have a chance to win. It's fast, it's free, and it's easy. All you have to do is just sign into the Fivers Hub, click on the contest on the left menu, and join the upcoming competition. We hope to see you all there. Good luck.